Yeah, we're all set. Thanks for coming on, Joe. Appreciate you taking the time.
Yeah, thank you. Thank you for having me on.
Yeah, so I saw that you the link that you sent me there. Actually, let me see if I can pull it up. Is that the link right there on your profile?
That's actually for a different project. Yeah.
Gotcha. Let me just pull up my DMs here. Or do you have it up on the site, or you just sent me the screenshot
Yeah,
there?
just a screenshot. It's not live yet, unfortunately.
Gotcha, no worries. Let me see if I can pull this up. When do you think it'll be live?
I'm hoping within like a week. Yeah.
Oh,
Yeah.
that fast?
I'm hoping within a week. Yeah.
Right on. Let me just see here. Bear with me for 1 second. I just got this Mac like 2 weeks ago, so having grown up on Windows, I'm still getting used to it.
Yeah. What is that? Is that an M2 or?
No, this is actually an Intel. It's a 2019. The guy that sold it to me, he was like, "Yeah, you're going to be hard pressed to find many Macs that still have this kind of configuration," and he was right. It's almost impossible to find them.
Okay. Well, how much RAM is on it?
I think 32 gigs and then
really
about
good, man.
512 SSD.
That's
I just took it for the
amazing.
RAM mostly, honestly.
Yeah. That's solid. Okay, cool.
Yeah, so there's your platform there. Is that essentially what the sign-up page would look like?
Yeah, that's where you get started. Yep, exactly. And then the other image, that's just the secondary screen of managing your token.
Okay. And you were saying that the reason that you started it was because you had frustration with like how the process was. Like, why would the average person want to like launch a token, or like what benefit could it set them?
Yeah, so obviously for starters, if you want to, launch usually it's for money purposes, right? Like let's say, there's some sort of meme going on. Like right now there's the whole one man versus, one gorilla versus like 100-man, meme going on.
Yeah.
If you wanted to like capitalize on that, right, you can just like, okay, well, I want to launch a meme token regarding that. But if you're just like an average person who doesn't know anything about blockchain or crypto, it's like, okay, well, where do I start? How do I do it? Typical way would be, you'd go on like platforms like Upwork, Fiverr, hire a developer, they build out your token, then they deploy like a website, etc. But like you're paying money to do that, you're wasting a lot of time. The whole process might take like a month, and then by the time the month is gone, like the meme has died down. So you need like a very quick way to create your token, and like that's what inspired sort of like the platform, so that you just have like a quick way. Within 2 minutes, you have your token out, and then that way you're able to move with speed. Because like the name of the game in this space is speed. Things change. Like a day in crypto is like, I don't know, 3 months, like normal time, if you want to put it that way. So this is why like I just wanted there to be a quick way for people, whether they're in the space or new to the space or don't know anything about the space, to just be able to create their own tokens for whatever reason they'd like.
Okay. And besides memes, have you seen any other use cases for tokenization?
Yeah, 100%. I mean, I know this is more at an institutional level, but there are pushes to get, let's say, stocks tokenized, real estate tokenized, and like this platform can definitely help for that too. Like this isn't limited just to the meme coin use case. Any token for any use case it can be for, and like even outside of institutions as well. I personally had launched my own AI crypto token before, and what it was like this like set of AI Telegram bots which were configured to talk to, let's say, like your Gmail and stuff. So you can chat with the bot on Telegram, and you can manage your Gmail through that without having to open your Gmail.
Okay.
But then in order to use the bot, you need to own like the token, right? And like that's how sort of like I gave the access and then like drive demand for my token. So there's a lot of ways you can get sort of super creative with it.
Okay, so that's basically like it's an AI agent that you have in Telegram operating.
Yes, exactly.
Okay,
Yeah.
gotcha.
Yeah.
Because like all the use cases that I've seen of AI agents, every time in a commercial, it's like pick your travel destination or like do simple shit like that. And I'm like, I can do that on my own. Like I don't, I don't really need an agent or like to go through all of that. Like it just the way that AI seems to be implemented in companies now is that like anything that they can plug it into, they're just like fuck it, like we'll do it because it sells.
Exactly. I don't think that's the thing. Like companies are looking more so to appease like investors than users. If you're a user, like you said, like if I want to book my flight, I should be able to do that in like a click of a button. I don't need an AI agent to be like, book me a flight to Ibiza, Spain at this time. It's like, no, dude, I just want to like click on the calendar, click book now, and I'm done. I don't need AI for that, right?
That's right.
I feel like they use it more from like an investor perspective, be like, hey, we're using AI, we're an AI company. When in reality, it's like the user did not ask for it whatsoever.
Mm-hmm.
There are obviously instances when you do need it, like in my opinion, obviously, and maybe I'm biased, but for the tool that I built out, I thought it was pretty cool because you could leverage the AI agent to like draft emails, send emails, like read an email, then it'd be like, okay, based on this reply from this person, reply back with so and then you'd send like a Telegram command to actually send that email.
Mm-hmm.
So like I think that's pretty useful, of course, you know, having like a chatbot that's sort of like integrated with your Gmail and operating around that context. But like you said, like if I'm just like booking my flight, it's like, dude, I do not need AI. I don't need AI for that, man.
Yeah, exactly.
Yeah.
Right on. And what got you started in crypto in the first place? When did you first get into it?
Yeah, for sure. So when I first got my first internship, actually, as a software developer, started making money, I was immediately like, okay, I need to invest this somewhere because, as you know, like inflation, your money sort of, you know, its purchasing power always keeps going down.
Yeah.
Being young, I was like, okay, let me find the riskiest thing, and then that led me into crypto. What was interesting though is like the first thing I did, I wasn't like, okay, let me start with the safe thing in it, like Bitcoin or Ethereum. I dove into sort of like the whole DeFi rabbit hole. And
DeFi is like
decentralized finance.
Okay.
Yeah. So I dove into that sort of rabbit hole. And as with most people, I put in some money, I kept losing it, right? Because that's just what happens, especially with you when you're new. And then after losing a few times, I was like, whoa, hold on. Like, I'm a developer. I see that these developers are making like a lot of money developing these protocols. It's like, why don't I get into this myself? And then that led me then onto a path from being like not only an investor, but also like a developer in the space and actually like developing my own projects. All of it was self-taught. University doesn't teach you how to code on chain. Yeah, it does not. No. So it was just me and YouTube, and like there was a cool like 18-hour video. I obviously didn't watch it in one go over many days, but I got into that, built out my own project, and then since then kept continually building. My first project, like I had like a few $1,000s invested. Most recent one, like, you know, like 5 figures, etc. And it sort of keeps growing. So that's sort of what got me into the space and got me into development as well.
Right on. And in terms of that project that you have for the Telegram, is that still, is there a website for that or?
No, unfortunately the website is down now. The project did die down.
Because of Gemini?
Yeah. Yeah, I mean, yeah, because of Gemini, yeah. So that project I had released in 2020, what was it, 2020? No, it was in 2024. Yeah. But a lot of these projects like sort of, so I had a pre-sale for it. We raised about like $30,000, which was pretty cool. But then immediately after it launched, people just like sold. They kept selling the token, you know what I mean? Okay. And then the chart didn't look the best. So then eventually like the project sort of
plateaued.
Yeah, it sort of like plateaued and people weren't really using the platform. But I was happy though, because the ones that did actually gave really good feedback about the UX and like their experience and stuff. So I was happy about that. But unfortunately, one thing I did learn is that like when you do the pre-sales, you kind of need to have like your own liquidity ready to go in the background to sort of like buy up those dips at the start. Yeah. I unfortunately didn't have that at the time. So yeah, it kind of just died down from there.
Okay. Yeah. Do you find that a lot of, I mean, I would assume you have a network of people that you talk to in the space that like when they do launch these projects, they do run that high risk of just becoming the next like pump and dump?
Yeah, that happens a lot. And like what I noticed in like when you are launching your own token, whether you have a pre-sale or you don't, you need to go into it with sort of like some capital reserved in the background to keep your chart looking at, they say like quote unquote healthy. So there will be times where maybe somebody, especially like there's the concept of snipers. So yeah, you know them, yeah. So a sniper might go in, buy up, you know, and then like people will start buying your token and then the sniper will like dump on them, right? And then there's like a big like 30% red candle, right? People will obviously see that and naturally get scared. So then that 30% candle just became like a 50-60% candle, right? So you need to then be able to step in with some like liquidity and then, you know, like buy up the tokens, do let's say like a buy and burn, something like that, so that it doesn't look so scary. So then that like 30% drop becomes maybe like a 15%, right? And then people see that and they're like, oh, okay, like this is okay. So chart health is very important for project because let's be honest, that's what everyone is looking at. Like anyone investing in your token, no matter how cool the project is, eventually they do want to make money. That's sort of like the whole point. So yeah, like that's just something like I've noticed from my own experience launching as well as like other developers launching. Like you need to have that liquidity ready to go and ready to be deployed, or else like you're gonna have a very tough time with the charts.
Right. I'm guessing like a lot of that can also be automated so that if someone does dump quite a few tokens, that you can automatically be like, all right, let's at least match that, if not like get a percentage of it.
Correct.
Because otherwise, like as we started, like the Bitcoin world, or the crypto world works in like fractions of a second.
Exactly.
So you got to be able to adapt like immediately.
Literally, yeah, exactly. So like even like as a developer, for example, I'd have to, let's say, like set up a bot which is listening in on like the price, and like have that bot set up so that it can put in purchase orders, right? And if something like that were to happen, the bot would, let's say, pick that up, be like, oh, okay, there was a 30% drop in price. Let me start bidding the price back up. So yeah, you need to do that for sure.
Okay. And how much of the actual sniping is automated at this point? Do you think?
Oh yeah, like there's so many out there. Like there's like, if you launch something, it's guaranteed to get sniped at this point. Yeah, yeah.
It's like regardless of how unknown you are?
Yeah, it does not matter, because like the way these things work is that you can just put like a set of parameters, for example, and then it depends, of course, like how loosely those parameters are set. So
like what the supply is?
Yeah, exactly right. So for example, they may listen in on, I'm assuming you know like the concept of like liquidity for a token, or
like that's essentially how much you invest in it, or how much is like held?
Yeah, so it's pretty much like in order for your token to be traded, it needs to be backed by something. So let's say I'm deploying a token on the Ethereum blockchain, it needs to be backed by, let's say, the Ethereum coin, so then people can like sell my token for Ethereum or buy my token using Ethereum, right? And usually it's like the developer of the project or the creator of the project who injects that like initial liquidity. And like I'll put up, let's say, 1 Ethereum against like the total supply of the coin, like 1 million of the coin, for example, right? So what a sniper bot can do is to, let's say, look at certain projects and be like, okay, like if a project has, let's say, more than 0.5 worth of Ethereum in its like liquidity pool, snipe that right away, you know, and then like play around with the price and then wait for it to increase a certain amount and then sell. And these things are running like 24/7 too, right? Like they don't work like a 9 to 5. They're working 24/7. They're working for a lot of people. I don't have the numbers, but I'd assume it's easily in the thousands. So it's very much dependent on the parameters you have set. And yeah, like there's some people who just have like the parameters like, oh, dude, like whatever token that goes out, just bid it, you know, just bid it and sell it. So yeah, everyone, they're out there for sure.
And what do you think the success rate is on that? Because like I would imagine it's kind of like how like high-end, from what little I understand about high-end trading, where like it's not about making $1,000 on a single trade. It's about like just getting like fractions of pennies across like 1 million trades, right?
Yeah.
I feel like that's essentially like that, just casting as wide a net as possible and then just collecting all that at the end.
And I wouldn't say it's not only that. So the good thing about sniping too is like, let's say you're the very first buyer of a token. If you get first dibs on it, and like let's say you buy it, if you the price of the token, unless there was, let's say, a pre-sale, is just guaranteed to go up, because like you're the first one who bought in. So like the next step, like no one can sell. This is assuming a few things, assuming there was no like pre-sale or anything like that.
Yeah.
Assuming all of the token supply is in like a liquidity pool, and you go in as a sniper and you buy up, you know, you do like the very first trade, you're guaranteed profit at that point. You know, like if there are no other wallets or nobody else like holding the token, that's like a filter, for example, the sniper can check for, is be like, okay, like find me a token where everything is in the liquidity pool and nobody has the token. That way I know there was no like pre-sale or anything like that. They would go in, buy it up, and like they're guaranteed a profit at that point. And yeah, and like even if, let's say, okay, you're not the first, maybe you're second or third, you still got in early enough to the point where if whatever parameters you set, you see that the chart isn't playing out to your favor, you can still sell at a favorable position, or like your losses will be very low. So it's sort of, it's low risk to some extent, especially if you do get in early. Of course, there's like we can get into like the whole rabbit hole of like rug pulls, and like maybe your bot, you know, buys into something and then the developer like rugs the token. At that point, yeah, you do lose all your money at that point. But again, like if you put certain parameters there, you can negate sort of those tokens.
Gotcha. So, and then the pre-sale would be like if you had like friends or investors that you want to pass like the coin on to, give them a chance before the crowd gets in. That's basically what that would be.
Yeah, exactly. You can think of it as like bootstrapping, you know, especially like the liquidity and stuff, like I mentioned. So if you want to raise money for liquidity for your token, you can definitely do a pre-sale for that. And pretty much the investors would get the token at a cheaper amount than the launch price.
Oh, okay.
Yeah.
Gotcha. I'm just pulling up this chart of, is this Fartcoin? Yeah.
Yeah.
So, because there's a couple of these that I've seen on pump.fun that actually they do last like for at least like a couple of weeks or something. How many of the ones that you've seen though have actually like had staying power? Is there really any that have kind of remained on the scene, or is it just a matter of time before it gets pulled?
No, it's a matter of time before it gets pulled. Most projects, like it would literally be like 98, 99% of them don't make it like this far. Like this is an anomaly, right? Like Fartcoin, like this is an anomaly. Like, oh yeah, from 7 months ago, you know, like the fact that it's still at a very like almost 1 billion market cap. And going strong like this, but like this is a really like one in, I don't know, a million sort of thing to happen. Most of these, there's so many things, right? Like you can launch your own token, it'll live for a few days. If the developer holds too much of the supply, he sells. Again, that goes back to chart health. It looks bad, nobody invests, it's done. There's also like if you rug pull. Rug pulling is pretty much like you put the liquidity, so people are like, oh, there's liquidity for this token. But then like the owner of the liquidity is typically the developer, the creator. He can also pull that in if he doesn't lock the liquidity. There are liquidity locks.
Right.
But if you don't lock it up, you can just like pull that away, and then you take people's money like that too. So yeah, most of these, like 99% of these don't last. And I mean, like I said, like there are, even if you look at a lot of the tokens in like the top 100 of crypto, you'll see a lot of charts where it's like they did their boom in, let's say, 2021, but then in 2025 they're like 90% down from like their all-time high, and they're still operating in still legit projects. But the issue is that they're, let's say, VCs and investors who got in so early into a coin when it was, let's say, at like 1 million market cap. Now it's at like 100 million. Those guys made like a 100x on their investment, and then the chart just looks horrible and nobody wants to buy it anymore. So yeah.
Yeah, because I've seen there. I forget the one, but like there's a Google image or like just an image I was going around. It's like a chart that showed the pump.fun earnings of like the people that actually put up the coin versus how much the platform got back. Because there isn't their whole basis that like if it doesn't reach a certain cap, then the money just automatically gets dumped into the platform.
Yes, exactly. Yeah, that's exactly how it works. If you don't reach, so in Pump Fund's case, if a coin doesn't reach its bonding limit, so if not enough people sort of buy into it, it doesn't go out to like open to public trading, and then like whoever's holding that token is just gonna sell it off and it'll die down.
So when you say public trading, because like before it reaches that cap, like people have to buy in. So is that like once again the pre-sale that you're talking about, or?
Yeah. So using Pump Fund, because Pump Fund does things a little bit differently. You can think of when you initially launch on Pump Fund, you're sort of doing like a pre-sale for your token, and then after a certain point, once like a certain amount has been invested, it launches on something called Radium. That's a decentralized exchange, and it'll launch at sort of like a price cheaper to whatever you got in on the Pump Fund platform. And then since Radium is one of like the biggest decentralized exchanges on Solana, then that's what I mean by open to like the public, that like anyone can then go in and trade it. Technically, like Pump Fund is obviously open to the public, so I could trade it there, but it's still in the pre-sale phase.
Oh, okay.
Yeah, but like once it's in an actual legit like, you know, like liquidity pool and like Radium or like a decentralized exchange, that's when people can go in and start, you know, buying and selling the token and stuff. But an issue with Pump Fund is that a lot of the coins that do make it to that stage, since again, like Pump Fund was technically your pre-sale, you then, you know, launch on the decentralized exchange at a higher price, people will just immediately sell. And then chart looks horrible, nobody touches the coin again.
Right. So if you're actually good at it and you set up like a decent bot and you have a good system, is it stupid to say that it's free money?
It's not stupid to say. It's not stupid to say. You just need to be very much on top of your parameters. Because like I said, like the space moves super quickly, right? And there are also like times where it is easy money and times when it's not. For example, now everything other than Bitcoin is struggling a little bit, even Solana a little bit. So if you go in now into Pump Fund and stuff, you're not going to see many coins bonding and going on to like a decentralized exchange. So that makes it a lot harder to use your bot, buy, sell. Like there's a lot less volume, a lot less opportunities. But if you go back to, let's say, November, December, January, that's a time where like things were like popping off, right? And like those are the times you want to capitalize on, and then those are the times where it is like very easy money, as long as you're staying on top of it. But like these slower times, you kind of do sometimes need to take a step back, just let things, cool off, because they're just, those opportunities don't present themselves in the same way.
Okay. And why is it that crypto fluctuates like that? I mean, I know like just like in the market, there's not really any one reason, but is there any like specific trend or like specific reason for the recent downturn? Because I've heard it, like I've spoken to an NFT gallery owner in Montreal, and she said the same thing. Like I pulled up the Ethereum price, and she's like, "Yeah, don't look at that. It's like, it's having a bad day right now." And I was like, "Yeah, it looks like it for like the last couple of months."
Yeah. So two things because of that. First of all, crypto is still considered a risky investment.
Yeah, speculative asset.
Yeah, it's a very speculative asset, right? So what happens is that if global markets like the stock market starts going down a little bit, then automatically like crypto will sell off a lot more.
So, really? It wouldn't be inverse?
No.
Okay.
Yeah, if like let's say the S&P 500 starts like selling off a bit, that means like the market is starting to get a bit worried. And then you'll notice that, let's say, Bitcoin, Ethereum, these guys, they'll go down a lot more. So the S&P might go down, let's say, 2 to 3%, which is a lot for the S&P. But then you'll find like Bitcoin or Ethereum will go down like 5, 10, maybe even 15%, right? Because like it's more of a riskier investment. And another thing too is that if you compare the market capitalizations, I mean, Bitcoin's is pretty huge now. I think it's on par with maybe Apple's market cap or something. But still, like the space as a whole, if you take the total market cap of all of crypto, I think it's at like 2 trillion, 3 trillion.
Only that little?
I'm pretty sure.
Like the total global market?
The total, yeah.
Wow.
Yeah, I think it's at 2 to 3 trillion. And if you compare that to other assets, I don't even know. I don't know if it's like gold or stuff like that. I forget which one. There's one that's at like 22 trillion or something like that. So like there's still a long ways for it to go. And since like technically the liquidity in the space is low, that's why you see like huge fluctuations. You'll see stuff go up like 100%, 50%. And like that's why also like Bitcoin, let's say, I mean, it's been doing the best, but like typically Bitcoin will move less than other coins. So like if it's a day where crypto's in the green, if Bitcoin is up like 5%, you may notice Solana up like 15%, and that's because like Solana's market cap is a lot less than Bitcoin's. There's less liquidity, so it's much easier for the price to fluctuate. However, you do get the downside of it too, where it's like, okay, well, if Bitcoin is down 5, Solana's probably down 15. So you have to sort of play that as well and keep that in mind.
Interesting. Yeah, there's a lot more to this than I realized, because I would go on like coin exchange websites on occasion. I'd just be looking at some of the examples and I'm like, why the fuck is this a coin? Like I don't understand what the value in this. But then Pump.fun came around and I was like, oh, I get it. It's like it's speculative trading. Part of it is like gambling also, but it's like calculated gambling.
Yeah. And like there are a lot of people, again, like when times were good, like a few months back, they sort of got into like the zone of, okay, like I'll monitor Twitter, see what like the next new big meme is, and then like launch a coin on Pump Fund, and then like,
I did notice that.
And then like just hope it does well, right? And like it has become a bit of a gambling system at this point, I think. But I think like the reason why people prefer, let's say, systems with Pump Fund is that they're transparent in the sense that you can see who got in early. A lot of the bigger coins that are out there, and again, why like their charts don't look so good, is because let's say when the coin was initially launched in, 2020, 2019, there were VCs and investors who got in behind closed doors. They got in at like dirt cheap prices, but you don't get to see, those happen. And then the coin launches, maybe it does well a bit, but then, like the VC sitting on like literally like a 200 or like a 300x, and they'll just dump everything. And then like the chart will look absolutely horrible. At least with Pump Fund and these platforms, it takes a lot less for the token to sort of go on a decentralized exchange. And then once it's out there, then it's, fair game for people to just keep like buying and selling. So there's less insider activity going on. And everything is more like transparent on chain. So then it just makes it easier to look at something and be like, oh, okay, yeah, like this, I'll take a chance on the one gorilla versus 100-man. Meme coin.
Or whatever.
Like, this is like the first one that launched on Pump Fund. I'll just throw my money into it and try my luck. Okay.
And when you say the VCs and the closed back doors, because I was under the impression that like everything is on the blockchain, so you can actually see who, like, not who, but like which wallet owns like what supply, or is that not?
So that still applies.
Okay.
However, for example, you can still do it in a way like I could be a VC and own, let's say, 10% of the supply of a token. I don't necessarily need to own it on one wallet though.
Right.
I could own it on 20 if I wanted. And if anything, then you'll go on like the holders list. You'll see there are 20 wallets. Each holds like 0.5%. You may not think much of it. But if there's one person controlling all of those wallets, that's when it becomes problematic.
Okay.
So yes, to your point, it is still on chain, but because you don't really know, like, okay, do they have these split over like multiple wallets? Like what's going on? I could have them split over 100 wallets too, and then you don't know. And it doesn't take much effort to do that, right? And then one day I wake up, wallet 1, sell, wallet 2, sell. Take me like 10 minutes to do, and I've made my 200x.
Right.
Yeah.
And in terms of the impact that this kind of stuff has like on the crypto community as a whole, I've talked to some people that have like very strong opinions for or against it on both sides. What do you make of it? Because from my understanding, like finance, like with most things in life, it's not black or white. It's just endless shades of gray. So to say that it's good or bad is, I understand the moral argument behind it, but realistically, markets move with money, and this is just yet another form of that. So I don't know. I'm kind of ambivalent towards it. Like I get it. I don't want casinos to shut down.
Yeah.
You know, if you want to go gamble your house away, like you should have the right. If you're an adult, by all means, like that's your business. I don't really care. Not for me, maybe, but you know, by all means.
Yeah, yeah. So in terms of that, yeah, like you said, like I'm also like to each their own. And like the thing is, like you mentioned, like things are on chain. So like people have that information available to them. Like I can't necessarily, I might be incorrect, but you know, like I don't think that I could go into, let's say, Apple shares. I may be able to see some of the holders, but I know there are like different types of shares. Maybe there are more, this isn't the right term for it, but I would say like maybe like there are public ones and sort of like privately held ones. Like there are preferred shares, normal shares, stuff like that. So like stock market, you don't really have that transparency like on chain. So like even again, we made the VC example. It's like sure maybe they got in behind closed doors, but still to some extent I can see like the wallets and the split up and the distribution and stuff like that. So I'm pretty, you know, like also like okay, well, you know, like the data's there. It's then up to you to, you know, make that decision. And like you said, like you need the money in order for stuff to go up. A good example of this is the Trump coin. When that
like the one that he officially launched?
Yeah, the one that he...
Whatever happened with that?
Yeah, I mean, that, again, like, what happened there, and I think I actually saw this today, but I think they said that only, like, 53 holders out of, like, hundreds of thousands of holders made profit off of that coin. Yeah.
Really? And how many of them were like pre-sales?
Yeah, so, like, that's the thing. So, like, what happened with that coin is that it launched at a very low price, and then the insiders got in at that like dirt cheap price.
Oh yeah.
Right? And then it obviously like skyrocketed. Like you can see now the market cap is like in the billions, right? Like a couple $1 billion.
Wow.
But like when it initially launched, I think it was sitting at like in the millions, right? So think about million to like $1 billion. It's like almost like 100x.
Yeah.
So, and if I'm an insider and let's say I put in even $10,000, my 10,000 is now $1 million. If you then take that over, even if they said the 73 people who made profits over the hundreds of thousands, okay, 73 times $1 million is $73 million. If that gets, you know, dumped on the market, people are going to be losing money. So these things exist, and like unfortunately, like you need to be really like weary of them. And that's like a big trend that I've noticed too, is that there are a lot of these like coins which like they'll launch, and like the developers, the creators, you know, like they'll get in super cheap and like pump the price up immediately, and then you're like, oh cool, it's like there's this Trump coin, and then, you know, it'll go up a lot, and then they'll just boom, 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 sell you out. Yeah.
Okay. Because I totally can't believe that I forgot about this. Also, I can, because Trump is so fucking crazy that like every single day there's something new. But yeah, I'm surprised that like the legality of this has not been investigated. Because like however you feel about Trump, like that seems, I don't know, a little bit shady for like a politician to do that. I don't know how I feel about that.
Yeah, I agree. Same thing here. But I mean, what I've noticed with this cycle is that people have just sort of become almost like accustomed to it, which is weird. And like that's something I don't agree with. Like okay, like, you know, insider trading, all that stuff, that can happen. But like normalizing, let's say, rug pulls and stuff like that, I don't think that's cool. I've literally seen like YouTube videos that's like, oh, like how to rug your
Oh yeah,
token.
or like that famous kid that like was on Pumped on Fun. I don't know if you saw the clip.
Which one?
He was like cheering about like rugging this coin, and then people like found out like where he lived, what his address was, and then no, not just that. They found the next coin that he was investing in. I think they were like tracking his wallets or some shit. So they rug pulled him, and he lost like even more money.
Wow.
Yeah.
Yeah. I mean, deserved in that case, but yeah, like I don't like how people have sort of like normalized it through the cycle and just they've sort of just accepted it. It's like, oh yeah, okay, I got rugged. It's like, no, like sure, again, there may be, you know, like the whole VC stuff, there may be like insider trading stuff. I think there's stuff that's acceptable because like these things also happen in the stock market. It's just a lot more, you know, kept low key and also at like a smaller scale. But like we can't get into like, oh yeah, it's okay for us to just rug pull coins. Like, come on, guys. Like there needs to be stuff where, you know, you put a hard stop and it's like, no, dude, like you can't just be doing that. So there needs to be some sort of standard out there.
I don't know if like I don't think there's any like real legislation that can be done about it. I feel like it's just a behavioral thing. Like I don't think that it's going away anytime soon. The only way to like really kill it is to like make it unprofitable, but then you would need like what, some kind of AI that monitors trading real time and that like asks you to fill out a CAPTCHA or something before you make a sale. But even then, it's like if your agent is good enough, you can bypass that. Because it's one thing for people to be doing this. Like you got to have a monitor set up. Your reactions got to be quick. Like you got to be able to like pull the trade, put more money in, what have you. Like that's still like motor function. But the moment that you have a computer involved, it's like, well, that just takes it up like 1,000x.
Yeah, but the issue with legislation is like the whole premise of crypto is decentralization.
Yeah.
So the moment you get the government involved, it then actually becomes very black and white. It then becomes centralized because like I can then say, okay, I don't know, in order to launch a coin, you need to like officially register it as like, I don't know, a company or something and fill out all this paperwork and get all this stuff and like dox myself and do all these things. But you then run the risk of then people being like, nah, dude, okay, I don't want to launch my token.
Or I just wouldn't do it in this country.
Right. I'm not just going to do it in this country. And then, okay, well, I mean, that kind of defeats the whole purpose of crypto in that case, right? And then things will start spiraling down. So I think that's the reason why. And I know this U.S. administration is very like pro-crypto. So I don't suspect any legislation to come within the next few years. We don't know what will come after. But unfortunately, like as much as I'd actually like to see some form of legislation, but I don't have like a crystal ball, so to speak, to look at it and be like, I think this is the way to go about it. Because again, I feel like you can easily just go down a rabbit hole where you turn things from decentralized to centralized, and it just defeats the whole premise of everything. And then it's just like, dude, what the hell is the point of this now?
Yeah.
You know?
No, absolutely. And yeah, like we said earlier, it's like why would I bother doing it in this country? I could just
do somewhere else,
incorporate it elsewhere or what have you. Yeah,
exactly. People will always find loopholes and stuff, so it's better to keep it the way it is, and then because it is the way it is, then it's on you as a user to then just be aware of the risks and stuff, and then just go forward from there.
Okay. And do you know of any like I don't know whether it's like bots or tools that like people use on a day-to-day basis that can like either inform them or like let them know like, hey, this is like a good idea to invest or this is not. I guess that would be a little bit tricky because you're asking to make like a financial advisor at that point. But is there any like that you know of like tools or anything like that? Any platforms that offer that kind of service?
I know there are platforms that offer. I personally haven't used. I'm maybe in a more of a unique spot because I'm a developer. So it's one of those things where it's like if I wanted to get into that, I'd build my own out. You know what I mean? I do know there are tools out there, but I can't necessarily recommend any. And I'd also say, obviously, be careful of scams because there are going to be a ton of them.
For crypto, especially.
Be careful of those. But hey, if you can learn how to make your own bot, I think that's the most ideal. You don't rely on anyone. I have seen, this is jogging my memory a little bit, but there are some projects, a couple of like these bot projects, and the way they work is actually similar to my AI project, but again, like they're Telegram bots, and then you need to own like a certain amount of the token in order for your bot to work. But then you start getting into, let's say, security issues. If, let's say, the bot is taking care of the trades and like it has its own wallet and stuff and its own private key and stuff, you don't know how that, like the creators of that application, how are they handling your private key in the wallets?
Yeah, where is it hosted, on what
Yeah,
server,
all
what's
of
the
that
encryption?
stuff.
Yeah.
Yeah, like all of that stuff. Do they just have access to it? You
Yeah,
know what I mean, right?
yeah.
So there's a risk of that too. So that's why I really stay away from using other people's stuff. Again, maybe I'm more in a unique position because I could just, go in and code up my own thing. But I'd say like also be very weary of that. And unfortunately, there are like a lot of projects where they run legit for a while, but then something happens and a crack happens and then everything goes down to zero. Like I've seen their projects, they'll be in like the tens of millions of market cap, verified on X, people are talking about it, or even they're like, oh dude, this is like the best thing, and then something happens and then it'll just plummet down. A little security issue here, security issue there. Sometimes it's done on purpose by the team. I've seen so many times like teams will come out to be like, oh sorry, there was like a bug.
Sure.
Okay, yeah, it's like sure,
Yeah.
And actually, people sometimes believe that, And I look at it, I'm like, dude, what do you mean there was a bug here? Like, yeah, they're like, oh, sorry, it's like this got compromised. Like, no, like it doesn't work like that, right? And they'll just blame it on that because like average person doesn't know. They'll think bug is like, oh, there was something wrong.
Yeah.
But the point I'm trying to get to is that there's obviously stuff where it's like very obvious where it's a scam, but I take it a step further and like even if there is stuff where it's not a scam, if I'm not in control of my wallet, not in control of my keys, not in control of my stuff, I stay far away from it because like I'm pretty much just opening the door out to losing my funds, and then it's like what's the point at that point?
Yeah. No, and as a developer, I would figure I wouldn't trust shit. Like,
exactly.
Like I would not have a smart like TV, smart printer, none of that.
Exactly.
Everything's got a VPN on it.
Yeah. Everything would be my own. So yeah, just be wary of the fact that there are projects out there that seem legit and they may have been running and like they're green flags and everything looks good, but that risk will just always exist no matter what in this space.
Yeah, because I've heard of like one of the bigger ones. I think it was Luna. I don't know if it was a coin.
Yeah. That blockchain. Yeah.
Yeah, but they CoffeeZilla recently did like an expose where like his research was actually cited like in the court documents, and some of the wallets that they found ended up actually making it to the case. Do you know anything about what happened with this one?
Yeah. So with this one, and this is actually a really good example and shows you about like the whole trust thing. So this coin was one of like the top, like literally in like the top 10 cryptos. And like, dude, if you're even in the top 50, that's like a legit project, right? What people really liked about Luna was they had this thing called like algorithmic stablecoin, and like you could earn very high yield off of it. Like I'm pretty sure you could earn like 15 to 20% on a stable coin, which is something that's one-to-one pegged on the US dollar.
Okay.
That literally beats the S&P 500. Like S&P 500 on average makes you 10% a year on a good year.
Okay.
And now imagine, so you like think of it as like a savings account in a bank. You just put your cash in the bank, like here's 20%.
So Luna, they held a certain amount of reserve currency, and they tied the value or the amount of that currency to how many stable coins they had.
Yeah, exactly, yeah. But unfortunately, like, because, and I think, okay, so I remember now, I think it's like, if you bought more of the Luna coin, that like kept the peg more stable for the stable coin. But then like if Luna started to sell off, they would then need to sort of do things on their end and like inject more liquidity in order to make sure that the stable coin price remains the same.
Right.
So I think what happens was that there was a bit of a drawdown on the Luna price. And what they could have done was like they had funds available to them in like the billions of dollars to sort of like re-stabilize, but they didn't do it, and they didn't do it quick enough, and then it just became like a snowball where it was too late. So I think the big issue here was that there was a depegging, which is red flag number one, that shouldn't have happened, but okay, there was a depegging of like their stable coin. They could have gone in and saved it, but they chose not to. I don't know if that was out of greed or whatever it may be, and then it just free fell from there.
Okay.
Yeah, so, and that also shows you that, when there's something that's like too good to be true, to stay away from it. I remember at the time everyone was like, dude, you earn like 20%, but that's just, it's running off of Ponzi-nomics at that point, right? And if there isn't continuous demand on the Luna token, everything will destabilize. So that's the problem. Yeah.
Gotcha. And sorry, was this the token that they launched, or did they have an exchange of their own, or what was this?
So Luna itself was a blockchain,
right?
And then that blockchain has its own coin, similar to, let's say, Ethereum. So Ethereum is a blockchain, and like the native token of the chain is Ethereum. And then like as like Ethereum has like stable coins launched on it, Luna had its own sort of also like native stable coin. I think it was called UST, I think. That was sort of like their native stable coin. And yeah, it was like if people keep on buying Luna, I believe that like burned the supply of the US coin, but then if people sold Luna, I think that would like increase the supply. I may have that mixed up, but like it's one or the other. And then yeah, it just eventually caused like a depeg and things went south.
Okay. And what was even like the proposed value of this? Was it just like here's an asset that you can invest through, or do they actually have like something built on top of it?
They had something built. So most of these other blockchains, their main selling point is always, because like Ethereum is like number 2 to Bitcoin. Bitcoin is known to just be like store of value, right? But let's say you want to actually like build applications, launch tokens on like a chain, you can't really do that on the Bitcoin. Like even though Bitcoin is its own blockchain and the native currency is Bitcoin, I don't want to say it's impossible, but it actually may be impossible. But you can't really like launch your own tokens, launch your own decentralized applications on the Bitcoin blockchain, or at least it's not designed for that. Ethereum is designed for that. So, but the issue is with Ethereum is that when usage increases, gas fees, which is what you use to interact with the blockchain, increase a lot. So if I want to like use someone's application to do, let's even simplify it further. If there's very high usage on Ethereum, and let's say I want to send you $10 worth of a coin, I may need to pay $20 in gas fees, which is like to fund the transaction, right? But I'm only sending you $10, but I'm paying $20 for the transaction. So it's like, what the hell is going on, right? But with Luna, I believe like the proposal was like, oh, like it's faster, it's much cheaper, like things are like, pennies for like transactions and stuff like that. So they did have a blockchain. They did have it built out. It was cheaper to use than Ethereum. So that's obviously like a big thing too. But other than that, like the main thing that drew people were just that algorithmic stablecoin and just making those crazy yields.
Gotcha. And are gas fees, is that like a part of every single like coin that exists?
Every single, I'd say, blockchain that exists. So Bitcoin has gas fees, Ethereum has gas fees. The way they work typically, and this depends on the blockchain, but to put it simply, a blockchain is run on like a set of multiple, let's say, computers or infrastructure.
GPUs,
like you, for example, could run the Bitcoin blockchain on your laptop right now, right? And in order to incentivize you to do that, running the network means running the transactions on the network, right? Or validating transactions. And in order to incentivize you to do that, that money has to come from somewhere, and that has come from the transaction fees. So if I'm using the Bitcoin blockchain and I'm sending someone 1 Bitcoin and I pay $5 transaction fee, if you're the one executing that transaction, you want to get paid to do that, of course, right? So you'd get that, let's say that $5, and then that stacks up over time, of course.
Okay. Yeah. And is that the same as mining then? So when you're mining, you become a node in the network and you're just processing transactions?
Exactly, yeah. It's the same thing.
So that's mining.
It's mining.
Okay.
Yeah.
Because I thought, like, I always had sold to me that mining means like you're solving these really, really complicated like math equations and trying to guess what the next token is going to be. I didn't realize that the next token meant like the next token in like whatever the transaction code is.
Yeah. So it's that aspect of it. It may be so with mining, because there is transaction mining.
Oh, so it's different.
Yeah. Okay. So sorry. Yeah. It is different. There is that type of mining too, to like mine for like the actual tokens, but there's also transaction mining as well, which is then that concept of it also involves like solving hard math problems in order to process the transaction and then getting the fee. But you are right, there are two separate things.
Okay, interesting. All right, so that's a direct incentive. If you have the hardware, or if you better yet have a warehouse, then it only makes sense to do that. Like I know there's this one bathhouse in New York. It's like a sauna where they mine Bitcoin and the heat that they get from it from their GPUs, they pump back into the sauna to heat the whole thing. So it's like a closed loop system in a way. I mean, up until the point where like it doesn't become viable anymore, but either way, like pretty useful.
Yeah, I feel like if you have a setup like that, you can definitely benefit off of it. I know there's a whole thing with mining that, you know, because like the cost of all of these like Bitcoin miners and stuff like that always goes up. And there's a cost, of course, of like electricity,
Yeah, the GPUs themselves too,
in order to run these things. So, but I think it does, like over a long enough period of time, it does become profitable for these guys, hence why they do it, of course. But yeah, definitely a profitable thing to get into if you have the initial capital to do so.
Yeah, I think I have a family friend that actually heats their home in the winter like that.
Damn, wow, okay.
Yeah, he runs like a mining rig, and he has like a heat pump going to the rest of his house, so he just pumps hot air from it. Just like in Canada, that's fucking perfect.
Yeah, exactly.
That's awesome. I'm actually, you know what? I'm now surprised that like this isn't like a national initiative. We should just set up fucking crypto miners in like major government buildings and heat them like that instead of having to like deal. Wow, okay, that actually should be a possible thing. Why isn't it?
I don't know, man. I feel like, well, I mean, here in Canada they're not so pro crypto, so
well,
forget about it.
Yeah.
In the U.S. maybe, but I assume that you're gonna get those people coming out being like, oh, the environment. And it's like, well, okay, you know.
Well, would you rather like have them like that, or you want us to burn coal, or like what's
exactly.
going on?
I know,
like,
but like they'll just hear like, oh, it's running and it's mining, and they'll be, oh, environment. You know, even though like you said, like logically, if anything, it's saving it, but
it's also getting it from the same power source. Like you're not if 20% of the grid is in coal and 30% is like nuclear, that's still going to be used to heat the buildings. Like the boilers aren't like, we're not actually shoving coil into them. They're running on electricity like everything else. So like that just depends on like where the supply of electricity is coming from. We can have a talk about that, but like how we actually transmit it into something useful, like this just seems like a clear and obvious solution. The only thing that would concern me is like infrastructure-wise, you wouldn't want to peg your entire system on crypto. You would want to have backups, especially in like the freezing winters up here. But even having like, I don't know, 10, 15% nationwide, like that would be amazing. And then we can add that like government reserve to like the government crypto reserve. Now we actually have influence on the crypto market.
I agree.
Like there's only benefits here. I'm failing to see. I'm failing to see why this isn't a bigger thing.
You got to tell them that, you know. But I mean, maybe from a government perspective, I mean, they run obviously like the monetary supply, so maybe it's counterintuitive to them to be like, oh well, we control money and inflation, and then obviously crypto is sort of like a hedge against that, especially Bitcoin.
Right.
So it's like, oh, like we don't want to show our complete and utter support towards it. So I think it's that too.
I guess, but like then also wouldn't it, like you were saying like earlier about like the BlackRock investing and all this and having their own supply, they can affect like its value over time.
Yeah.
And maybe, I'm not saying the government of Canada can buy like 10% of the global supply of Bitcoin, but that wouldn't stop them from having influence. If anything, it would actually allow them to have influence in a different financial arena, right? Like, so besides like the idea of having that, I think I know where I'm getting at. So basically, with a monetary supply, it's only Canada that can actually print that money. Whereas if you buy like crypto, anyone from Algeria to New Zealand to wherever can affect the value of it too.
Yeah.
Okay, because it's not the same. Like it's one thing if like the Canadian currency was like global and people could affect that supply, but our currency is not nearly as popular to do something like that.
I think an opportunity for governments is stable coins, both like either like US or Canada perspective. I know like the big ones are obviously the US one. There's USDT and USDC. Those are both privately run by companies. Dude, but those guys make like so much money. Like they make billions, and like their profit margins are so nice. I don't know exactly, like from my understanding, they actually have like the cash reserve. So let's say they have, I don't know, like a total supply of their token. It's elastic, so it goes up and down. But let's say it's 5 billion, you know, they have to have it 1-to-1. Like they'll have like a 5 billion reserve from my understanding. They'll have like a $5 billion reserve. But I feel like if governments implemented I feel like they should implement their own stable coin, you know, and be like, no, like use our stable coin. And as long as it's decentralized, similar to those other ones, like they can start racking in those profits too, and then lower people's taxes and stuff like that. Because like it's technically your currency if you think about it, right? So I always used to see like an opportunity there to be like, oh, like why doesn't the government just launch its own stable coin? Have people use that instead and then make the money that these private companies are making And then, you know, obviously lower taxes, et cetera, et cetera. Would work better in the U.S. and people wouldn't really use a Canadian stablecoin.
Yeah. I don't think I would either.
They exist. I have seen
Yeah.
one before, and I know there's like a Euro stablecoin. Like they do exist for the various currencies, but obviously like the big ones are the USD ones for sure.
Okay. So private companies are actually able to get involved in this. I'm guessing like there's some contracts with the government that they have to get into, or is it just a matter of like, I just want to buy 5 billion bills or whatever?
I'm pretty sure it's just that. Like I don't
Okay.
think there's any like special agreement with the government. Like they're just privately owned, and as long as they have the cash reserve there, they just operate freely. Yeah.
Okay. Okay. So what do you think the future of crypto in Canada looks like? Because you know, it's great that like we're here in the Solana Toronto Village today, and that like people are putting up a good fight against what's happening. But it doesn't exactly look good, just with like just the basic stuff that I've heard. Like I was scrolling through this website yesterday that was like showing how friendly certain politicians are to crypto, and I scroll down and I see Chrystia Freeland is extremely unfriendly. And I'm like, oh yeah, you were like the financial advisor to the prime minister for all those years, like that.
Yeah.
That kind of tracks. But there were so many that were not friendly to her than those that were. It doesn't paint like a good outlook for what's going to happen in the next couple of years. But I think that just with how inflationary spending is happening in this country, there's not really going to be a choice. It feels like people are going to wake up one day and be like, huh. This is extremely uncomfortable, so I'm just going to start buying Ethereum or Solana or what have you. Like, why would I bother? There's plenty of exchanges that operate legally in Canada. You got to give your ID and all that kind of stuff, but by all means, anyone can sign up.
Yeah.
So it feels like the more that they fuck around with our money, the more inevitable this is, right?
Yeah, that's true. So, yeah, like you said, like future doesn't look too bright, but like the silver lining that I sort of see is again like US obviously has a big influence there. So so long as the US is like very pro crypto, it'll be tough for Canada to then come in and be like, oh, we're gonna like start clamping down on this stuff. So that's sort of like the thing that I look at. I'm like, okay, that's the positive of it. And then like sort of like no matter what, like if it like I don't know how many people in Canada use crypto. I think the last number I saw was like maybe 5 million, which is like pretty decent amount.
It's about an eighth of the population.
Yeah,
but even then, like how many of them are adults, and that's an even bigger proportion.
Yeah, so but I think like it'll just come down to the people. The more adoption increases, which is happening, you know, the more obviously that puts pressure on politicians. Because if so many people are using it, like they have to cave in. They just have to cave in. And I even think like a reason why, or like partial reason why Trump beat Kamala was because like Kamala wasn't necessarily like pro crypto. Like Trump obviously came as like pro crypto, and then the U.S. is probably I don't know maybe 50 million people were crypto. Yeah, it's also like a very big amount there. So obviously like that's there you go. You just secured like whatever 30 million, 40 million votes from crypto people just for saying yeah I'm pro Bitcoin. You know, so if adoption continues to grow in Canada, which I'm hoping it does. That'll put pressure on politicians not to start, you know, like clamping down unless we just become a communist party, communist country or something. And they're just like, nuh-uh, you know? And then at that point, people will just start moving out. So,
Yeah, no, they certainly would. Because one of the things that like really turned me on to crypto was like during the trucker convoy when they froze those people's bank accounts. I was like, look, whatever your political allegiances, however you feel about that protest or what happened during COVID, like put that to the side. If the government can do that to those people and they say, oh, it's just temporary measures, that means that they can do it to anyone because they have that power. So, you know, the administration might be on your, technically, like your side politically, but that's not to say that there isn't a future that exists that at some point that'll be turned on a different group of people or the entirety of the population or what have you. So the moment I saw that, I was like, oh, this is fucking concerning. I didn't know they could just do that. And for people that weren't even at the convoy, they just like sent their money in. So it's like, oh, so based on my purchase history, they can just shut me down? Like, okay, well, fuck that. I'm going to start looking into crypto. Like, this is, I have no other choice. Like, I don't want to be left holding the bag and the bag has nothing because they fucking took it all, right?
Yeah, exactly. I mean, it's two things. Number one, obviously, free speech, you know, like they keep like especially here in like Canada, North US, like it's a huge thing for us, right? So like obviously when that happened, that just like shakes your trust. It's like, dude, like that's supposed to be like a fundamental core like principle of our society, and you just broke that principle. Right now, you can't say free speech, but free speech is free speech. There's no like, oh, free speech, but if you talk about COVID in this way or do that, then no. There's no if or buts to it. Free speech is free speech, period, full stop. And like you said, once you start doing that, it just opens a slippery slope of like, well, what else can I do this for? And that's why, and I think this happens more so in Europe. I know they're starting to move away from cash, and that actually brings me to another point. Now, I think if you go to any bank, especially in Canada, if you're even like, if you whether you're depositing or withdrawing cash, and like I've heard even like my dad stuff like that too. I think he was like withdrawing, I don't know, it was like $500, like literally like peanuts. You know what I mean? And like it was a whole questionnaire. Why?
Really?
Yeah. It's like, why do you need the money? Where did you get the money from? It's like it's literally in his bank account.
Wow.
And it's such a small amount too. It's not as if he's like, give me $10 million. You know what I mean?
Yeah.
Something so small, like it's gotten ridiculous to the point where it's like such tiny amounts of money they ask questions about. And I even remember I used to like even depositing. I remember I was with him one time. He was depositing like $2,000. Where did you get this from? And like they start talking to you in this suspicious way, and it's like, dude, what are you like?
Fuck off.
A, it's my money, and then B, it's not even a crazy amount. It's like $2,000. It's like it's nothing crazy, right? So that's obviously where crypto comes in. I was actually talking to somebody here, and they were complaining about like opening a business account with one of the banks, and they got like a 10K transfer, and then I think those funds got like locked or something, and they had to call them like 16 times. He told me it's like call the bank 16 times.
Wow.
In order for it to get resolved. His money, with proof of where he got it, all that. But just because it was 10K, they froze it, did this, did that. Dude, on like Ethereum, if hypothetically you had literally like $1 billion worth of Ethereum, I could send it to you, no questions. Like no one can like stop that. They're not be like, oh, it's $1 billion. No, like it'll go through. I'll pay $10 for the transaction, and $1 billion has just been sent. I don't think there's any like, as we're seeing, $2,000, $10,000. Like they're really clamping down. And yeah, like the point I was trying to get to as well with like the whole cashless stuff, and I know they're starting to do this in Europe too, but I think they're trying to digitize everything, and like that concerns me because that obviously like gives them more control over everything. If everything is digitized, and I know most people don't have cash now, but still, like even if you have a little bit of backup here or there, if you like completely eliminate that, then it's like, what are you gonna do? Like let's say those truck drivers, assuming maybe they had, I don't know, they had like an emergency $10,000 in cash lying around in their house, right? At least, okay, like your bank account gets frozen. In the meantime, you need to pay for stuff, right? So it's like, okay, you'll go into that stockpile and like try and do something with it. But imagine then a cashless society where everything is in your bank account. Well, what do you do then? And then imagine like everything else. I mean, they were even talking about it for electric cars too. If all these cars keep getting hooked up to like software, well, I mean, then they can control my car too, right? And then so like, you need to be like very aware of these things, and it can go down a path that isn't so good. You can just find, your bank account gets locked up, you can't use your car, stuff like that, and it's pretty concerning. I'm not gonna lie. And like, luckily, you got crypto and decentralized stuff, and like that's why I'm also with the legislation point that we made. I think the more decentralized it is, the better, or else you just start running into stuff like that, which is not what we want.
And I have seen examples. I know exactly what you're talking about in the UK, especially. There's like footage of like old people going into banks and like just getting asked all these questions. It's like, why the fuck do you care? And the other, like the counter argument that I hear sometimes is like, oh well, if you have nothing to hide, then you shouldn't worry about it. It's like, well, that's a retarded point to make, because like if somebody makes the argument like, oh well, what if you're using it for like drugs or terrorism or whatever? Yeah, people do that with cash too, man.
Yeah, exactly.
Like,
exactly.
If you go somewhere in Africa, you can get an AK with US dollars. That's not anywhere in the world you can get a gun with US dollars. US dollars are accepted as like the universal currency essentially. Like it doesn't mean that anybody that uses cash is therefore going to use it to buy guns or what have you. It just means that it's free for everyone to use. So yeah, naturally cartels are going to use cash or crypto or what have you. Like, why punish the people for it? And the fact that, I haven't heard any like personal stories about transfers like that, but I've seen like footage of it everywhere, and it is certainly concerning. The best one that I've seen though was this guy that went to a cashless store, this old man. you got like these 2 things of strawberries, and they're like, oh, sir, we're cashless. We only could do card and like, you know, Visa and all that shit. And he's like, I'm putting down this £5 note here. You guys can do whatever you want. I'm walking out. Fuck all of you. Like, this is ridiculous. And yeah, they let him walk out. And I was like, yeah, that is concerning, because we just had an outage, I think it was like last year or 2 years ago, with like Rogers went down for like a hot afternoon, and no debit machines work, like nothing. It's like when you centralize a system like that, you're just setting it up to fail. If you don't have cash, if you're not able to run your car or what have you, like that, you're just waiting until the day it all fucks up, and then you're really fucked.
Yeah, exactly. And actually, that's a big thing that I like about blockchain and Bitcoin and Ethereum and stuff like that, is that, I mean, obviously this is not sustainable, but technically, like, you could, like, if your laptop was the only laptop in the world running Bitcoin, technically we could all use it now. Mine day would be slow as fuck. It's like it wouldn't be able to handle everything, but technically speaking, still, it would be running. And then obviously, like, you scale that over, like, you know, thousands or tens of thousands of like nodes, validators, infrastructure out there. So it gives you that, you know, like, safety net of like, okay, the network is running, and it should always have like 100% uptime. I don't think there was ever a time Bitcoin network went down. I hope not to get fact checked on that, but as long as there's one laptop running it, you're good to go.
Yeah, I'm actually curious now, has Bitcoin network ever gone down? Probably not. I would wager that it hasn't, just because like if it ever did, it would make the headlines around the world for a while, and it would definitely affect the price. But do you know if Ethereum or Solana have gone down? Or?
Solana has.
Okay.
Yeah, Solana, and people have actually complained about that. Solana's actually gone down, I'm pretty sure, a couple of times, because there's still technically, if you go on Solana, they still technically say, like, if you connect to their mainnet, it'll be like mainnet-beta. So they're still technically in like a quote-unquote beta phase. And it's also the issue with Solana is that I believe it's run on like centralized validators. So centralized meaning, like, I think like the Solana Foundation or like investors and stuff, like they run the validators. I'm pretty sure like me or you could run our own, but I think it's like a whole process and it's very expensive to do. It's not it's not as friendly as, let's say, Bitcoin or Ethereum. And yeah, like, so yeah, I know Solana's had some downtime and people have complained about that. But yeah, Bitcoin and stuff, I mean, I'm seeing here that there was stuff when it did go down, but I mean, look, 100% uptime from 2014 to 2024, you can't really...
That's pretty good.
Yeah, you
that's
really,
pretty damn good.
Yeah, I know. You can't really bet against that, so that's really solid.
Okay. And now, when you say the Solana Foundation, because I don't quite know, like, the lore behind, like, how these blockchains got started, but is it just literally, like, just the amount of people that would have to be there? Is like, so VCs, investors, you got developers, and then they're like, all right, we're going to create this new tech that's jumping off the last one, except like it's a new iteration. Is that like all it takes, just a private enterprise?
Yep, that's all it takes, because like at the end of the day, blockchain is just software running on laptops. That's all it is. So like Ethereum, Bitcoin, Solana, all of these stuff is just like a live software running on laptops, and it's blockchain software, so to speak. So yeah, as long as you have the funding and the developers, obviously, you know, like to build out your own blockchain is very very big task. That's not a thing a single developer can do. And then obviously, like, to run it and stuff, and the infrastructure for it and stuff like that too. If you want it to be scalable enough, you need money for that. But like you said, yeah, if you get some investors, some VCs, talented developers, if you want to build something off from scratch and then just start running your chain, yeah, you can get started tomorrow and be like, here's Joe chain. You know, use Joe chain. Yeah. Okay.
And do you know anything about like the Bitcoin lore? Because Satoshi is usually like he's the main figurehead around it. But do you know if there was like a team involved, or how that like was developed, or?
I'm not super aware. So yeah, I know like the whole Satoshi stuff, and then I think it just started, you know, one guy, and then, you know, a couple other guys, and then it just sort of like grew out, right? I know there are so many, like, I don't want to call them conspiracy theories because like I don't know if they're true or not, but like there are just so many theories about who started it, and like who is Satoshi? Is he like the freaking, I don't know, CIA or something?
Yeah.
I don't know, right? But yeah, like I think it's just one of those things started out small, piqued some people's interest, and then it just like gradually grew until what it is today.
Okay, because for Ethereum, I believe it's a guy by the name of Vitalik, who
Yeah.
actually happens to be a Canadian.
Yeah.
Yeah, I didn't know that. I learned that
yeah,
today,
yeah.
and then obviously he lives in the States now because why would you
Yeah,
why would you bother?
Yeah.
Yeah.
Yeah. But yeah, same thing with Vitalik. So yeah, so that one was obviously like started by an individual who's like well known. I know he's like a genius because like in order like to create your own blockchain, I don't know how big his team was initially, but like whatever group initially started, like those guys are smart, and like that's why if you ever watch interviews of him, like I don't want to call him awkward as like a diss, but
He is.
but
Yeah,
like you'll look at him, it'll be like awkward, but like I say it in a good way in the sense that like he's like a really smart dude because like that tech. To build something off like that from scratch, you need to be literally a genius. And you're expected to be awkward if you know how to do something like that. So it's really cool that you got people out there who pushed this innovation and made it happen.
Okay. And do you know if there's anything on the horizon right now that's gonna eclipse Solana or in any way like evolve on it? Because like how old is Solana? I've really only heard it like in the last couple of years or so.
Yeah, I think it's a few years. I think maybe 2019. I'm assuming 2019, 2020. I think it started. Anything to eclipse it. So the thing about Solana is that it's very closed source. So what closed source mean is that like I think like the code, like the software, like the actual software of Solana, that's not open to the public.
Oh,
that's
okay.
just I'm pretty sure private to the Solana Foundation. Unlike let's say Ethereum.
That's open
Ethereum
source.
is open source, so that's how all these other chains, like let's say the Binance chain, Coinbase chain, I'm pretty sure all of those, so those are called EVM chains. That's like a type of chain. EVM stands for Ethereum Virtual Machine. So I'm pretty sure all of these, like all of these other blockchains sort of like forked off of the Ethereum code and then sort of like made their own version of it, you know, tweaked it a bit here, tweaked it a bit there, but they didn't necessarily like invent something new. Solana is sort of more of its own thing, and I think that's probably why they keep it closed source. But so long as it does remain closed source, you won't really find that anyone, because no one can really then like take it and build on top of it unless somebody tries to like reverse engineer it somehow and like build their own thing from scratch.
I see. So at this point, if anything does happen, it's either something from scratch completely or it forks Ethereum.
Yes, exactly. Okay. That's the two paths you go nowadays.
Gotcha. And is there like any utility that's really left? Because from my understanding, somebody explained to me how like Bitcoin, you couldn't really build anything on top of it. Ethereum had some functionality. Solana is like at the moment the ultimate like functionality in regards to that. So like what's missing? There like what would even be the underlying reason of anyone wanting to even invest any time or money into that?
I think like things can always get faster. Things can always get cheaper. Things can even get more secure. There's never really like a threshold for that. So if somebody finds a way to make things more secure, more faster, more cheaper, another point too, developer friendly. I say that because the difference between let's say Solana and Ethereum or other EVM chains is also like the coding language. So Solana uses something called Rust. Rust is complicated language because it's a more low-level language, so it's tougher. It's for like most developers don't know it.
Yeah.
It's a pretty niche language of its own. Ethereum and EVM chains, they use something called Solidity. It's its own unique language specifically tailored for blockchain, but it looks similar to other coding languages out there, like I'd say JavaScript and C. C is a bit low level, JavaScript isn't, but like when you look at the code, it doesn't look, very foreign, so to speak. So I personally prefer, because like I don't know Rust, for example, and I know like most coding languages out there. So another thing too is like for developers, because you want a chain where developers are building, right? A reason why, let's say, I haven't built a custom app on Solana is because like I don't know Rust. I'd love to build something, but I need to go through like the whole pain of learning that language inside and out.
Yeah.
With Ethereum, it was pretty quick to pick up on Solidity because it was similar to what I already know. So developer friendliness is also another metric you want to look at. Maybe there's a new chain that comes out, it's like its own, and so it's not Rust, it's not Solidity, it's its own language, and it just makes it very developer friendly and easy for people to build on that chain. So that's another thing to take into consideration as well.
Gotcha. And in regards to programming languages, I've always wondered how is it that they actually get about like being made? Who actually sits down to write it all out? And how does that happen? Because I do know, like, yeah, there's like dozens of different flavors depending on what you want to do, front end, back end, what have you. I've just never understood like who the fuck like how do you even do that? Like you're building a language, you have to figure out the syntax, all the symbols, like everything. How does that even, like, do you know anything about how the process is getting made?
Yeah, so the process, so let's take, I don't know, do you know, have you heard of Python,
Yeah,
for example? So I think what happens, I'll try and explain it as simply as possible, but like the way these languages work is that they give you as a developer an easy way to look at the code being written, and you just read it in a way that's just easy to use. And then what the language will do is it'll take care of like taking your plain English and then turn that into the zeros and ones or the machine code that your like computers get to run. I know there's some languages that are compiled, not compiled, but let's just assume the language is compiled. So I think like even Python behind the scenes is built on top of like C or C++, one of the two. So from your perspective, like you're running this nice easy code that gets maybe like translated over to like C or C++, I think it's C code. Then that gets translated over to like machine code, which is like zeros and ones, and then does that. So if you're building out your own language, you're sort of taking care of that compilation / translation part of like, how do I take this like nice and easy looking code for a developer and then turn it into machine code. I know like one layer on top of machine code is something called assembly. I don't know if you've heard of it. Yeah, so like let's say assembly. If you even want to, you know, I actually in university learned it, and I remember we had a task of building out, you know, Flappy Bird. Yeah. We had to build that out in assembly. That was a nightmare.
I bet, yeah.
Big nightmare, insane nightmare to do. But it gives you an appreciation for sort of like the other languages. Like if I were to do that in Python, it would be a lot easier to do. So like all these languages sort of like build on top of that. So like assembly is actually considered like higher level than machine code, because again, like that gets translated into zeros and ones. But everything sort of builds on top of each other to give, you know, that like easy interface to, you know, write stuff out in a plain English, if you want to put it that way.
Okay, so there is, just like for my understanding, the machine code that's at the base of it, that is like, that's a universally understood like the text or PDF or what like guide that I can read. Everything else is just about like how that's interpreted or what other filters it goes through, essentially.
Exactly. Yeah.
Okay, so there is like a machine code manual that I could read, but it will be pointless because like everything else just like it already translates into it. There's no need to understand it.
Exactly. Yeah. And obviously, like it's supposed to save you time, right? Because you could technically write the machine code instructions in zeros and ones, but you'd have to be a crazy person to do that.
Gotcha. Okay. Yeah, because a lot of the things that here, like in the Solana startup, a lot of people are building apps on the blockchain. What does it actually mean to like have an app that runs on that? Does that just mean like the various interactions that you have, the chats that you send, or what have you? Like all of that is just turned into blockchain code, or like what does it actually mean to like code on chain?
Yeah, so coding on chain. So we can use Solana as an example. You'd have to use their, like, let's say, like the language it supports, which is Rust in this case. And then you build out a program that does certain things. Like, let's say you create something. What's a good example? I mean,
it's like a texting app or like a notes app?
Yeah, sure. Or like, let's even say even simpler. Let's say you create a program. All it does is that you give it 1 Solana and it gives you back 2 somehow. That doesn't work, but theoretically, let's just say, right? I write that out in Rust. I then deploy that code into the Solana blockchain. It lives now on the Solana blockchain at a specific like address, so almost like its own wallet address, if you want to put it that way.
Okay.
And then when people then interact, people can then start interacting with my address, and my address points to my code, so to speak. So let's say I create a function in my code. I literally call it double my Solana.
Sure.
So what I'll do is, you know, I'll find your program's address and then call that function, that double my Solana function, and then it'll run, and I send it 1 Solana, it gives me back 2. So the whole idea is that as a developer, you create the code, you deploy that code onto the chain, it lives under a certain address, and then people can now start interacting with it because now it lives on the chain. And it lives there forever. Yeah.
Right. So it's not that my action of interacting with the code gets put on the chain. It's the actual code itself. But it's not as if like you just copied and pasted the code. It's just there's an address associated with it, a wallet, if you will, and then that wallet actually contains the code for whatever it is that you're building.
Yes, but still, like your transaction will actually get logged on the chain.
Right, but not like the details. Like if I send a message like, "Hey, how you doing?" Like that's not gonna be okay. Okay.
Yeah.
Okay. Just like the API call, if you.
Yeah.
Okay.
Exactly.
Gotcha.
Yeah.
Interesting. Do you know of any like crazy examples of that, like people building on chain, or like utility of that? Because just for security purposes, it would seem like every app should at least like try to be built on the blockchain, because like that's a fairly reliable network to tap into. Like you wouldn't even need to have like a token or anything, right? It's just a matter of like setting up a wallet.
Yeah, so what I'd say about that, so the way to think about blockchain, I like to think of it as, especially for, I'd say I'll talk more about Ethereum or like EVM chains. I like to think of them as like a public database. Since every transaction is public, and technically also on EVM chains, you can provide like the public code of like what your program actually does. You can use it for instances where there is like publicly data that you're okay with to be publicly monitored, for example. That can be, let's say, like NFT ownership, right? NFTs are literally just, like contract code that somebody has deployed at a certain address, and like you can monitor, like everybody's, like who owns which NFT and stuff like that. What was I about to say too? I don't know why I blanked. What were we?
So like, what is it that like, why is it that more apps aren't incentivized to do it? Why is the
Yeah, makes sense. So I'd say like, because the issue is that a lot of app data is private. So that's the issue then with doing stuff on chain, is that, okay, how do I differentiate between what do I want on chain and what do I want off chain? So that's why most people, okay, I launch a token. Public information is, who's buying, who's selling, who owns X amount of the token.
Right.
But once you start getting into like the programs themselves, it's like, okay, well, what is this program going to do? You have to take into account transaction fees as well. If I go on a website, like here, even with like Perplexity, I know I could technically buy a plan and use it. But I mean, like if you're just interacting with it on the free tier, like it doesn't cost you anything to do. But the moment you have a program on the blockchain, everything you do, and there's actually a difference between, so there's a concept of writing on chain and reading on chain. So if I'm a user interacting with your program, I'm typically going to be writing onto chain. I'm going to be doing a state change somewhere, somehow. That I'm going to have to then pay a transaction fee. So a lot of times, like, okay, like imagine if Perplexity was built on chain. A small issue there would be, it's like, okay, well, who's paying for every transaction fee, And another thing too is that as you store more and more stuff, so like let's say this chat that's here, let's say they have like a variable which is storing like this chat, storing your chat history. As the chat history grows and grows, and as you keep sending more messages, it's going to get more and more expensive because there's more and more data for the person running your transaction to process. So there's a scalability issue there too, where it's like the data you want to be interacting with needs to be small scale, but obviously with very big stuff, like again, let's take Perplexity as an example. It's just not viable if you're dealing with hundreds of thousands of messages and stuff like that. It's like, okay, well, who's paying for this? Is it the user? Is it us? Like who's paying for it? And then it's like, okay, well, as more and more data gets like piled into my program, well, now the transaction fees are going to increase a lot. Well, now I'm going to start losing money. So it's both a scalability perspective from like, okay, who's paying for the transactions, and the transactions getting progressively more expensive, as well as a privacy standpoint of, okay, well, everything on chain is like seen by everyone. So what am I comfortable showing? Like, how comfortable would you be with your chats just being open on the blockchain? Maybe not so much. You just want them locked down to your account. So that's maybe that's something a blockchain can solve.
Yeah. And so, but when you say like having your messages on the chat, like can somebody, like if let's say messaging app was built on the chain, can they like decrypt that somehow? Or
Yeah.
can they just simply say that, oh, I know this wallet is interacting with this wallet a lot, so this person must be sending a lot of messages on this app? Or like you can actually see the content.
Yeah. I mean, it would depend. So it would depend on how. So if they implemented something where it's like directly, like every chat message you send gets sent onto chain, it wouldn't be encrypted in any way.
Right.
And then you can just see the message there. Now, if then they could then add, let's say, like an intermediary API, which does the encryption. Perplexity owns like the encryption key, and then they put the encrypted message on chain.
Right.
They could do that, and then people wouldn't really be able to know, but that just overcomplicates it.
Yeah, once again, more fees and more.
Yeah.
Interesting. Yeah, so then I guess that makes sense why like most people that, at least from what I've heard, like when they're launching these apps, it's it does have to do with like tokenization, because at least then you have a way to counteract all the fees and everything that you're going through just to even have that app on the blockchain.
Exactly. True. Yeah.
Okay. Yeah, because one of the guys that I spoke to earlier today, they're building this thing called, I think it's Soul World or something like that. Let's sec. Let me actually just find the message. They essentially want to build a VR chat room. It's called Society. Let me pull it up here. Yeah, they're entering the hackathon here as well. Hope they win, because they have. Oh no, that's not it. That is definitely not it. Let me see here. There it is. Yeah, Society Solana. So they want to build essentially like a VR, not a VR, but 3D playground for people to just go on, be able to interact with all these different apps. So that essentially the point is to not just simply rely on having to go on Twitter and scroll the feed and like just chat with people. Now it adds like another layer of interaction where people can actually have these little avatars, and they can play all these games or like have the apps that are hosted on the chain to interact with them. I think they're still in like the pre-alpha phase, just working on getting money, but let me see if I can pull up some video. Yeah, so it'd be basically like this. You just go around, you have a little avatar. If you want to like feature some NFTs in your room, you can. It's kind of like the metaverse, essentially.
Yeah. Nice, okay, that's super cool.
Yeah, and everything is built on chain. They're currently working on onloading this guy who's creating, it's like an audiobook service that's also on chain. The purpose for it is because audiobooks in general with Audible and whatnot, just like Spotify, they really fuck over the creators by giving them like a fraction of a fraction for every play. So they want to create a system where it actually incentivizes creators more and gives them more money. And that app they're hoping to host on this platform essentially. So you'll be able to walk in to like a library, sit down, read an Audible, and you can also see like who else has read this book and interact with them. And it just has that kind of social component to it.
Nice. That's super sick. Nice.
Yeah, why is it that the metaverse never took off? You heard about it nonstop for a little bit, and then it just kind of went away.
Yeah, that's a good point. I think the issue with it is that the term metaverse makes it seem like there's sort of like one metaverse, but the issue is that what I found is that you could technically have an infinite amount of metaverses. You can create your own one, I can create my own one, Facebook can create their own one, right? Like everyone can have their own metaverse. And I remember when virtual real estate on the metaverse, that was like a huge thing.
Snoop Dogg bought 100 million or whatever.
All that stuff. Like, I think people eventually, like, there was obviously that big hype for it, but then people sort of thought about it practically, and they're like, okay, dude, like, virtual real estate, it's not like Earth's real estate. Like, Earth is finite.
And it doesn't go offline.
Yeah, exactly, And it doesn't go offline, right? But, like, this virtual real estate is infinite. Like, anyone can create a metaverse. So it's like, where is the one metaverse, you know, and again, it actually comes back to like one of our starting talking points of like, oh, okay, you know, like using, let's say, AI to book a flight, you know. I think like with the metaverse, it was also like, okay, but like, what am I using this for exactly? Like, how is this making my life easier, so to speak? You know, it's like, well,
just showing off land and NFTs.
Yeah, I know. It's like, okay, like how is this making my life easier in this way or that way? It's like, oh, it's games. Okay, anyone can create a game.
Yeah,
you know what I mean? So, Yeah, I think that's why eventually I think people sort of like just had that realization that, you know, like the stuff they were sold on with like virtual real estate and like, oh, you gotta get this, get that. They're like, dude, like this is infinite. And like there's no real feedback I'm getting back as a user. So it didn't take off.
Yeah, because the thing that they want to do with society is like ideally they want to create a community where people can create these apps and host them, and so that it adds that layer of interaction with it, so that you're not just like using the app alone in your house, like in your monitor. Now there's all these people around you in there, and you can actually interact with them. And it's supposed to apparently run natively in Discord.
Yeah, that's sick.
So
that's nice.
that like, just the footage that I've seen, like just the tests, I was like genuinely shocked by it. I don't know if my computer would be able to run it in Discord, but the fact that you can just like be in a Solana server or what have you and just be in a chat room, and then next thing you know, you just go into this server and you could just meet those exact same people.
Yeah, I agree. No, it's pretty dope idea.
Yeah, I'm interested to see what happens with it, because I know that they're not the only competitor in the space, but do you think that this is going to kind of expand in the future as time goes on, as crypto evolves, and people are just going to find newer ways of interacting? Because like, I'll be honest with you, I fucking hate Twitter's search function. It breaks half the time. Like,
Yeah.
I don't know how they have Grok, but like Twitter search just like shits itself half the time. So having that like extra layer of interaction would certainly help, especially if you could like have multiple things going on at once. Like if you want to play poker, by all means, like go to this room and you can actually bet with crypto or tokens or what have you, and then that carries on to like everything else that you do in that world, creating like that seamless thing. Like, do you think those kind of worlds are going to be expanding in the future?
Yeah, I definitely think that. I think there's a place for it. I mean, this is pretty much like back to the metaverse narrative, so to speak. And I think like, let's say the fact that they're doing it on Discord, which is, you know, just like an easy way. It's not like I have to download this like special app or something like that to get it to run. So like the more accessible it is and the more niche it is, right? Like the more people will use it. Because again, like there needs to be like a reason for me to use it. There needs to be a reason for me to look at this and be like, okay, like I want to hop on this to like do this, do that. And another question is like, okay, well, does this exist elsewhere? And then another thing you think of too is like, okay, the poker example. I'm not into online gambling, but like you have to think for those who are in it, it's like, okay, do I want to go through the extra process of like creating an avatar and like from the outside it may seem cool of like, okay, I create my avatar, we're all sitting at like the poker table and playing poker, but if I'm an online gambler and playing poker, do I want that extra bit, or do I just want to go onto a website, you know, I just play my cards with the dealer, boom, I'm done, you know, no avatar, no nothing, no interaction, I just, you know, play, win or lose my money and bounce. So that's sort of like where you have to think about it. I think how people building out projects like this have to think about it too, is that, okay, like what does a user, like what do I want out of this, you know? Do I just want it to be like a social hub? Do I want to be able, like, which activities would it be worth to have in here, etc. And it's always best to start, you know, specific and then broaden your way eventually.
Yeah, because the one takeaway I've had from NFTs and the people that I've talked to is that it offers them kind of like a price of or barrier of entry into the club, so that it's not just like open for everyone, because with exclusivity, like there is a certain perk that comes from it, because it reduces like the amount of scammers in the space or people that are trying to fuck around, especially like if there are mediators that can resolve that. So with NFT communities, I've now come to realize like, oh, it's just like not gentlemen's club is not the word for it, because that's what they used to be called, not strip clubs, but you know what I mean, like that kind of exclusive club that people can get into. Because I've heard like Milady, they do like raves and stuff all over the world. Like all these different communities have their own thing. Bored Ape Yacht Club has their own thing. Do you know much about that, like how those communities function?
Yeah, so the way it works is that, I mean, these NFTs, just think of them as like individual tokens living on chain. And then each token is obviously tied back to like a wallet address, whether it be me, you, or whoever owns like the Bored Ape. And then what happens is, like, I know Bored Ape Yacht Club, like they had like their own like private Discord, for example. So like what would happen is that, okay, let's say I want to join it. Well, they'd have like, let's say a Discord bot or some way to like check on chain to be like, okay, well, does your wallet own a Bored Ape? If yes, let him in. If not, no. If eventually he sells it, kick him out, you know, sort of like monitor that. And this goes back to sort of like the blockchain being a public database, right? Because like you want, let's say, your Discord server to be able to read on chain and then see that, okay, yeah, this person owns it. let them in. And another reason why you want that information on chain is like, let's say the alternative would be you keep it in an internal database. Well, why people won't buy in is because like if you're an admin to that database, you can just go in and then say, no, this wallet doesn't hold it. You
just be
like,
arbitrary with it.
You can just look, you can be like, oh, I don't like this person. Okay, get rid of their thing. But when it's on chain, it's like you can't do anything. Blockchain is immutable. So you can't really like mess with that, right? So that's also a good reason why they have it on there. But yeah, that's mainly how it works. They just see like associated wallet and then they just plug that into different applications. So it's like they'll have a Discord server, check to see if you own that wallet, if that wallet owns a Bored Ape. If yes, let them in. If not, get out of here.
Okay. Yeah. Do you know like of any like benefits that like people have like joining the club? Is it literally just like networking?
It's literally just networking.
Okay.
It's networking, and I mean Bored Ape. Everyone is different, so like I'm pretty sure those guys got I think an airdrop for the token because I'm pretty sure they launched that ape coin. If I'm not they had like an ape coin that they launched, and I'm pretty sure if you held an NFT before a certain time, like you got an airdrop of that. So it's sort of whatever the creators do, and yeah, I'm pretty sure it is ApeCoin. But yeah, like if you held the NFT, then it's like, okay, yeah, here's like the ApeCoin.
So it would allow you to be like an early buyer into the space before it goes live.
Exactly, yeah.
Okay, so once again, like more like a chance to make more money.
Yeah, 100%. Because like you'd get it at the dirt cheap price, and then it would go live at like a higher price, and then you can technically just sell it off and make easy money.
Okay, so I'm maybe it's just because I'm not part of the actual space myself, and I don't have an NFT. But like besides making more money. I guess like what? So networking so that way you could meet other like developers, other investors. Like I'm from the outside looking in, I'm failing to see besides like why would I do that when I can just go to like a social event or like a mixer or what have you? Like is it just more exclusive? Like they have not an ultimatum but a like a manifesto, like a political leaning or something like that. I don't know. Maybe I'm just too disconnected from it, but I'm failing to see like besides the social aspect of it, is there like any other utility that any random person can have?
Yeah, I mean, like again, like this depends on the project itself. When Bored Ape was at its peak, I mean, you had literally like celebrities, stuff like that too. So it's not just like, okay, well, these just give me like network, but the question then becomes, well, what is my network? And like that's why let's say like Bored Apes were going for like hundreds of thousands of dollars because like technically, okay, now I'm in like the same room as like big shot celebrities. Now, whether or not I'm able to network with them is a whole other story.
Right.
But still, like, you technically do have access to them, right? And then it's up to you then to determine if, okay, like, is $200,000 worth it for a chance to, let's say, talk to Justin Bieber
or whatever,
you know what I mean? So that's what it comes down to is, okay, well, what is the exclusivity of your network? I mean, I could launch a community. And I actually do have one, but like I could have a community and then have like an NFT for it. But maybe for now, it's not worth much because there aren't many people in it. But as it grows, as it expands, the price could go up because it actually provides value.
Okay.
So that's the main way it would work.
Interesting. Yeah. So then I guess that's perfect for like content creators that are also like building a brand because you could essentially just like launch the token or what have you. But then like whether you do merch, whether you do streams, whether like whatever it is that you end up doing, that coin is going to be tied to the value of the successes of all these different ventures. So that'll be not a stable but a long-term kind of investment that you can have into that so that if more people buy into the coin, then you're able to have more capital to put into whichever ventures you're doing.
True. Yeah, exactly that. Yeah.
Okay. So this is essentially, in a way, crypto can be used to kind of stabilize or to invest long term into like the creator economy essentially.
I agree with that. I mean, yeah, it gives more ownership in the creator's hands because like the other way, if you don't use crypto, you'll use like, I don't know, a payment processor like
Patreon
Stripe,
or whatever.
Stripe, I don't know, like whatever it may be, in order to get your payments. Obviously those will take like cuts and fees and stuff like that too. And then yeah, like you said, like there's a difference between me accepting like a payment or like having my own coin which grows in value. If I'm a creator, I launch my own coin. Let's say I own a certain percentage of that coin. Maybe today I'm, small, no one really knows about me, but 2 years from now I have like millions of followers, this and that. my coin has gone up X amount of value, right? Now, I'm a millionaire just off of that coin. So it definitely gives like a lot more ownership. Like think like you own your own like currency. Like let's say Mr. Beast launched his own token, right? That's like his own now currency that he can do whatever he wants with, and that he can share obviously to his fans. And it gives an opportunity for both the creator as well as the fans to do it. Like imagine if Mr. Beast launched a token when he first started his YouTube channel.
Oh, wild.
Yeah. And then like imagine if like the first few people saw his videos, really liked it, and like bought the coin. And then like he's now where he is today. Imagine like how expensive the coin would be.
Yeah.
Right? So it's like both would sort of benefit. Mr. Beast would benefit because his coin, which he owns a bit of, goes up. His fans who own also a portion, it goes up. And then like they can benefit both the creator as well as the fans too.
Okay, so then like goes back to one of the topics that we started earlier. What is the incentive for creators to do that, knowing that they can be sniped by some dude in Nigeria or what have you? Like what, like, because if I was a creator, if I was like into the space, I haven't had any propositions yet, but I've given it some thought of like, do I want to do this? I've seen people like get scammed, whether it's like the person that created the brand or developer they hired on the team or what have you. Like any number of things could really go wrong in that. What would be like some stopgap measures or like just things that people could do to make sure that like they're not like decrease it to zero, because it's always going to be part of the space, but is there any way to like do your due diligence to make sure that like, okay, if you invest in this, like don't invest $1 million, maybe a couple hundred, it'd be great, help support my brand, help support what I do. The value is going to go up and down over time, but we're not going to see like candles going to the fucking to the floor.
I'll shamelessly plug that coin launching project that I'm working on right now. I've actually put in parameters for it, but this is more so for the Ethereum, because like you can either launch a coin on Ethereum or Solana. But for the Ethereum version of it, I do have both. One is whale protection, whale just being someone who owns like a large supply of the token,
like 51% or whatever.
Exactly, as well as sniper protection too. So there are ways you can put, because like at the end of the day your token is built on top of like code, and there are parts that you can do custom configurations to. One of that is that sniper protection. So what I've done is, let's say like add certain mechanisms in place in the code so that snipers get like penalized pretty heavily for buying the token when it first launches, and that'll sort of like keep them away from your token at least. And then that's like a precaution you can take as an example. Whether you develop that obviously from scratch, get someone to do that for you, or use like the platform that I have. So there are ways within like programmatically which can sort of like protect your coin from, let's say, snipers, from the whale stuff like that. And if you do have those in place, that sort of like brings it down a bit, and like that's why you're making sure you're not getting sniped and stuff like that. So there are definitely ways of doing it.
So is it just a matter of like having like a maximum amount of like coins that you can buy or tokens that you can buy at a certain amount? Like what are the actual measures that can mitigate snipers?
So you can put, let's say, very high transaction fees on the sniper. So what you can do is like, okay, if you're buying in the first 1 hour that the coin is out, put a 40% tax on that, and then each time they're buying at like a 40% discount, which is not good for them, right?
And would that just be like for the first, like, let's say, hour or what have you, and then the fees would like go down?
Then they'd normalize again. And again, like this is a thing, programmatically you can do whatever you want. If you want it to be an hour, if you want it to be 30 days, like whatever you want to do, you can do that. But I don't think like the sniper, since it's an automated bot, wouldn't be able to pick up on that. It'll just know that, oh, I just bought at like a freaking 40% discount, like get me out of here. You know what I mean? And then other sniper bots would probably like stay away from that. So there are definitely things you can put in place, and like you can play around with it, especially like as a developer. You can just keep playing around with like what exactly you want that protection to look like, and that sort of like saves you from stuff like this.
But so in terms of the sniping, so why wouldn't they enter the market then, like let's say after that hour is done and the fees have dropped to like an acceptable level of risk? Is it just because at this point so many people would assume to have like bought that certain amount, that it's
Exactly.
just not favorable.
Yeah, it's not only just that, but I think like the way, since these bots are automated, they're not that smart because like their whole goal is to get in very early. So if they get in early but then notice something, think of it as like sus from their perspective, then they're just gonna like exit their positions immediately and just not touch your coin, right? And then that gives an opportunity then for that sort of like sniping phase to die down. It doesn't know that in your program you have that set. Like it doesn't know that, oh, like an hour from now the taxes are going to, unless it's configured to like keep trying, but that defeats the purpose. The whole purpose of it is for it to get literally in the first like milliseconds that it launches. So unless somebody has their sniping thing configured to like check every like hour, which I don't know anybody who's doing that, because that again defeats the whole entire purpose of it.
Right, and by checking, like you would actually have to buy that
Yeah,
coin
yeah,
because it's not like predetermined information. It's not out anywhere.
No, it's not out anywhere.
Okay,
So like
okay.
you need to like actually do a buy, and then like
Okay.
what interval are you doing at? Let's say you do it every hour. What if I have it set that the first 45 minutes it's high taxes? Okay, you buy at the start, you realize it's high, you come back after an hour. Well, there was a 15-minute window where people were buying at normalized level. It's not favorable for you anymore to go, right? So there are ways to get around it. I haven't looked into how to do it on, I'm pretty sure there are ways in Solana. They have a new token standard. I think it's called Token 2022, but that's a whole other ball game. But I know with like the Ethereum ones or like EVM chains, you can programmatically put those controls in place, and then that negates sort of like those issues you were talking about. So definitely ways to do it, but you got to be a talented developer.
Okay, and then once again, that doesn't necessarily mean that like down the line, so like a weekend or something, that someone could just buy like a lot of supply or try to pump and dump it, whatever. It doesn't guarantee it.
No.
Yeah.
No. But I mean, still, like the goal would be you launch the token, you let your community know, you like let's say you have some people waiting to buy it, you let them know, hey guys, by the way, like transaction fees are going to be very high for like the first 45 minutes. And then hopefully after that 45, then people can start, you know, in a healthy manner buying and selling your token, and then the chart looks normal.
Okay.
And you don't just get ruthless snipers that are just saying, you know, pumping it up like 50% up, 50% down and stuff.
Yeah, and I mean it's not a perfect system. I would imagine it's difficult to build one, especially in crypto. But that sounds a lot better than pump.fun.
Yeah,
you know,
it is,
like that sounds like a little bit safer bet of like whether you're launching or buying a token.
Exactly, it is. Yeah, so definitely ways of doing it, 100%.
Okay, and so as it stands right now, you're just building the tech to create the token, but you're not like there's no marketplace on your site for people to like buy the tokens. Is that something that you want to do down the line, or?
So I'm thinking about that still. The way the platform works, so there's two things you need to do with the whole token creation process. A is you create the token, and that's sort of creating like the address of the token on the chain. And then step number two is launching it on a decentralized exchange, something where people can start to like buy and sell your token, right? Creating a token, again, like both processes are very complicated, whether you're a developer or not, whether you've been in this space for years or not. So creating your token is a hassle, and then even like the liquidity pool stuff, that's an even bigger hassle too. So the goal of the platform is literally just with your email, go in, create your token like form, couple of clicks, done. And then the decentralized exchange, it'll walk you through in like literally like 3 button clicks. You just set it, you say, okay, I want to back up, my supply of my token is 1 million. I want to back that up with 1 Ethereum, which is in my wallet. Send this, create the liquidity pool. Once that gets created, if you're, you know, a creator or whatever, you go to your community, you say, hey guys, here's my token. You can start trading it, you can start buying and selling it. And then you can start, obviously, like as the creator of the token, you can start actually making money from your token. So I'm not looking necessarily to create a marketplace, but to make it very simple for people to put it on like the biggest marketplaces out there, which are the decentralized exchanges. So right now, for Ethereum, that would be Uniswap. That's the biggest decentralized exchange on Ethereum.
Okay.
For Solana, it's Radium, which may be number 2 now, but it's either number 1 or number 2.
Gotcha.
In terms of that, yeah.
Okay, and so that's what the interface would essentially look like when you're looking at your token there.
Yeah, exactly. So let's say that coin in the middle where it says complete setup. So that's somebody who has the token now on the Solana chain, but they haven't opened it up for trading because there's no, it's not launched on a decentralized exchange yet. They'd go through a couple of button clicks. Behind the scenes, my application would take care of the heavy lifting of configuring everything correctly. And then once that's done, your token is live. People can buy and sell it. And I mean, like, that's the thing with, like, the difference is on Pump Fund, you need to raise a certain amount of money in order for it then to put it on the decentralized exchange. With this one, the nice thing is that you don't need to raise any funds. You sort of just can click through, you can put it on, and then just obviously advertise it out to people.
Okay. Now, when you say raise funds on Pump.fund, does that mean that you have to, like, you pay in, like, let's say 5 Ethereum or whatever, and then that's your liquidity pool?
Yeah, exactly. So, like,
Okay.
yeah, like Pump Fund is pretty much like a whole, think of it as like a pre-sale. You keep buying up the token, buying it up, and then once it reaches a certain market cap after it's been bought up so much, then it launches on the decentralized exchange. And then typically people dump the token at that point. With this, you don't need to do that raising. You can set how much liquidity you want, even if you just wanted to put up $10 worth.
Right.
$20 worth. You don't need to fundraise. I don't know what the exact number is on Pump Fund, but I'm pretty sure it's more than $10,000.
Oh, to launch a coin?
Yeah, in order for a coin to get to a point where they call it like graduated.
That's okay.
Yeah,
That's
yeah,
what I mean.
yeah. I mean, yeah, to launch, obviously it's peanuts,
Yeah.
but to get it to the point where it's on a decentralized exchange and more people can interact with it, you do need it to be, you do at least $10,000, I'm pretty sure.
Okay.
With this one, it removes that barrier of entry, and it's literally up to you to see how much liquidity you want to put up. And you can just do it in a couple of clicks, and then you're good to go.
Okay. And that Pump Fund 10,000, that just simply comes from people, like, buying the coin?
Yep.
Okay.
Yep.
Now, when it comes to that, because just so that I understand, I'm a little retarded when it comes to math. When people are putting in that money into Pump.fund, because the coin, does it not have like a stable liquidity pool at the beginning, or does that change as like the more people invest into it?
It changes. It changes.
Okay.
So so like it'll start at, let's say, a $1,000 market cap.
Right.
I'll buy in. It'll then go up to 5,000. You buy in 10,000. Then it keeps going up, and up to a certain point. And then once that money's been raised or it hits a certain market cap, then those funds get sort of like put into a liquidity pool for the token. And then obviously you own a certain amount of that token.
Right.
And then you can just start selling it or, of course, buying it if you want to on a decentralized exchange.
So the liquidity pool is seemingly infinite until it reaches that threshold.
Yep.
And then at that point, it's like that's the amount, that's the fixed amount, and it doesn't go beyond that.
Yeah. I mean, like it'll fixate at like the start when it launches on the decentralized exchange.
Right.
And then once people start buying and selling it on the decentralized exchange, then obviously it'll like fluctuate like a normal coin.
Oh, okay.
Yeah.
Gotcha.
Yeah.
Okay. Well, yeah, no, that sounds a lot easier than Pump.fund. And in terms of the cost, I'm guessing like the most revenue that you're getting from this is just like fractions on people like signing up to the platform. Like if I want to launch a coin for like $10, you'd get like a penny or something like that.
Yeah, so that's the way it works. Like let's say right now the plan is if you want to launch a coin on Solana, you'd pay, let's say, I think right now it's only 0.1 Solana, which is about maybe $15.
Okay.
So you'd pay, let's say, $15, and then for that in return, you can then like launch your own token. You'd obviously just need to pay like blockchain gas fees, which on Solana are dirt cheap. And then it would just be a matter of, okay, when you're creating, let's say, your liquidity pool, however amount of liquidity you're comfortable putting up against your token. That can be $100, it can be $100,000, whatever you want, but completely up to you.
Okay.
So it's pretty much making the revenue through that. $10, I mean, it's a meal.
Yeah.
If you want to launch your coins, so that's sort of the main source of revenue for it. And hopefully there also should be a feature as well where after you create your coin, you can pay an additional amount to get a website done by an AI agent.
Okay.
Because like most of the time when you do launch a coin, you want a website associated with it, right?
Yeah, otherwise it's just like,
I just
see it on the exchange. And
it's like, where is this, right? So there's, I'm setting up a process to like an AI agent process where like within, let's say, an hour, you'd like pay a set amount. AI agent would go in, create a nice website for you.
Based on like some templates and
exactly, and then create the website for you, and then that way you have a token launched on a decentralized exchange, and you have a website all within a few clicks, and all with just signing up with your email. So that's the goal.
Okay, interesting.
Yeah.
Yeah, that's very cool because most of my exposure, like I said, has just been with like headlines and whatnot.
Yeah.
So to hear like a breakdown of like, look, like there is scams to it. There is plenty of people that are snipers. There are whales, sure, but that doesn't have to necessarily be like the status quo. Because ultimately, like, that does ruin not only like its integrity within the community, but just like the public face of it and then the adoption rate for this tech, which is kind of sad because like it is like revolutionary on its face. Like it is fantastic that we now in 2025 have the option to be like, okay, well, I don't want my savings to just be in my reserve currency. I want it to be in something else just in case my state just decides to, I don't know, spend $1 trillion or whatever the fuck the next day.
Yeah, facts. That's true. I couldn't agree more.
Yeah. No, I'm excited to see where it goes because I'm looking to get into it myself. I don't even have a wallet of my own. Like, my main aversion to it is because it's my business. I don't want the government involved in it. And whenever I go on these exchanges, it always asks for all this ID. And I was like, yeah, I'm not comfortable with that. I really, I don't need anyone to have like a picture of my face or whatever. Even though, like, I know, I get it. We live in a digital age. I have a social media page. There's cameras everywhere. Facial recognition. I understand that. I get it. But like when it comes to crypto and my money, it's like, yeah, fucking hands off.
Yeah, exactly. I agree. I agree with that too.
Yeah, right on. Is there anything else that you wanted to touch upon? Not really running for time. We got another like 20 minutes or so. But
yeah, I mean, one last thing, if you actually go on the Twitter page, so I do have a community. I just launched it.
Is it this?
Yeah, it's this guy right here. I just launched it, a few people in there. But the goal with this one is actually to get people, and different types of people too, not just devs, but also like investors, marketers, etc. Get them all within one community and just go through different playbooks which can start making them money in the space today. So like I know me as a developer, whether it was, learning how to code, launching my own project, all that stuff, like I didn't have anyone to help me through that process. There isn't like a clear roadmap to be like, okay, if I want to learn blockchain development, where do I start?
Yeah.
Okay, cool, you got that out of the way. If I want to launch my own token, what do I need? How do I get investors? How do I market it? How the whole pre-sale stuff, what do I do with my chart? Like all these like super small details that make like a big difference. Like average person wouldn't understand like, like sniping, whales, pre-sale dumps, chart health, etc.
Yeah, that's why I had you on.
Yeah. So like most people just be like, I just launched a coin.
Yeah.
If it has a cool name to it, it's gonna go to like $100 million and I'm a millionaire.
Yeah.
But they don't take all of these other things into consideration, and the only way you get obviously that information is through people who've actually like been through it. So the whole idea with this community is like to bring people like together who are interested in making money in the space. Whether you're a developer, whether you're an investor, whether you're a marketer, you hear from different people like myself who've like gone through all of these steps and all of these stages and like understand the actual playbooks of like making money. So as a developer, okay, how do I learn? How do I launch my own token? As an investor, you then get access to developers within that community who may say, okay, I want to fundraise money for this token that I'm launching, right? As a marketer too, you get to understand the concept of like KOLs, which is like key opinion leaders and stuff like that, and like which ones should I be interacting with, which ones are like outdated, because again the space moves very quickly, right? So like 2 months ago there may have been a guy who was like the big hotshot that you pay like, I don't know, $100K to promote your token.
Yeah.
That same guy may still be charging $100K, but he's irrelevant now, right? But you need that information to be up to date. So this is just a place for like everyone to sort of like come together, understand those playbooks, hear from people who've actually been through it, not just some randoms, right?
Yeah.
And just have like clear step-by-step guides of like, okay, if I'm a developer, here's how I can start making money. If I'm an investor, here's how I can start. If I'm a marketer, here's how I can start, and then bringing them all together to also sort of build out their own things too. So,
okay. Yeah. So what does the gatekeeping on the community look like? Does like the barrier to entry looks like is like what 0.2 Sol per month, but in order to avoid any fuckery, do you guys have like a process by which you vet the people or anything like that? So
as far as like in the early process, no, as of now, but that's something that I do want to start getting into. What I actually want to do is that if there are people who are, let's say, in like similar shoes to me, and I've actually been reaching out to people like that. So for example, we talked a bit about liquidity pools. You can actually make money like injecting your own money into liquidity pools, and it's a whole other ball game, right? I don't know how to do that. There are people who are like specialized in it and like they make money off of it. So like I've been in, let's say, touch with like people like that to like bring them into the community. Those people would come in like experts, bring them in, let's say, for free, and like vet those guys out, bring them in for free to then add more value to the community. And then like mostly like people who are just here to like learn, those are the ones who would like come in, pay the 0.2 SOL to get access to said experts, and then learn from there. So experts to be vetted, yes. People to join, at least initially, no. It's meant to be, you know, sort of like open to most people, right? Because like, you know, I know 0.2 SOL as of now isn't like a crazy amount, right? But like if you are willing to, you know, make that investment and just take that first step, you know, like that shows your seriousness enough, right?
Yeah, what is that? 0.2 SOL to, let's say to CAD.
I think 40, maybe 50, yeah.
That's a single coin. I was like, what the fuck? Yeah, there's no way. Okay, so yeah, about $50.
Yeah.
Interesting. Okay, so at the top level, the people that are actually like disseminating all this information, there's a control on that. But anyone that wants to just be a buyer, well, not really much money lost if they're paying that subscription a month. And also like there's plenty of like chat bots and whatever that can just ban people for posting fuckery or what have you.
Of course. Yeah, of course.
Okay.
I mean, yeah, obviously, like if you, let's say, like came in and your goal is just like spam links and stuff, you're just gonna get kicked out, right? Like no questions asked. And I do have like different bots set up in the group to mitigate that. But yeah, like if you're paying the money, then it's assumed you're serious enough, and yeah, you can come in and then just learn. It's just the first step. It's the first step of making money in the space. I don't want it just to be a place where it's like, oh, like here's how you learn how to do stuff. Like, it's like, no. Like let's just cut the bullshit. Here's how as a developer you make money. Here's how as an investor you make money. Here's how as a marketer you make money. And here are like, you listen, you get the experiences from the people making the money. So as a developer like myself who's already made it, here's how I do it. Again, I'm working on bringing in more people from spaces that I haven't worked in, like let's say liquidity pools. I bring those guys in too. And those guys like, no bullshit. Here is how I do it. Here is step A, B, C, right? It's not, I'm going to teach you about liquidity pools and how a liquidity pool works and all that. It's like, no. Here's how you make money today doing this, right? Same thing with here. As a developer, here's how I create my own program, smart contract, token. Here's how I make money today doing this. As an investor, how do I identify the different coins doing this, and that? So the goal of it is like, yeah, like whether you're a beginner, even if you're intermediate or advanced in the space, come in, make the money, and just hear it from people who have already done it. That's the key goal of it.
Gotcha. So there's like, it's, forgive the comparison, but it's like if Tate University was actually legit. Anyone could like just join, and there is actually like actionable steps that you can take towards making money, and there is proof because the people that are advising people on this are actually like they work in this space. So like say whatever you want about their advice, but like if you just look at their record and be like, okay, well they've done this project, they've done this, they've done that, like they can actually back up what they're saying.
And like the goal is to keep, and like again, like the reason why it's, let's say on like a monthly subscription and stuff like that too, is like to always keep the information up to date. One thing you'll learn too is, again, like the space moves hyper quick, and like that's why you need experts in there as well to like keep that information up to date. I gave the example for like marketers and KOLs. You might have, again, a guy who like today, you pay him $100,000 and maybe, you know, he gives you $300,000 in return, you know, just based on all the people he can attract to your token, right? Good investment, right? You know, 100K, you get 300, who wouldn't take that, right? But literally, like it can literally be 2 months later, that same guy, big shot, all of that, may still be charging that amount, maybe even more. But because of something, somewhere, somehow, market conditions, whatever it may be, you don't get jack shit from it, right? But you need, you know, some people who've been through the process to tell you that. You're not just gonna know that. You're not just gonna understand the whole idea of snipers or like whales or like how to make a chart look healthy or like when to do a pre-sale, when not to do a pre-sale. You need people who've actually gone through it, who've had the experiences of both making and losing money, right? And then you just get like no BS guides of like, okay, here, I want to make money today. How do I do it? Here's your playbook. I want to do it today. Here's your playbook. I want to do this today. Here's your playbook.
So and it's not even like a guarantee. It's just this is the method that has worked for me in the past, and here's the proof of that. So you're welcome to try it out. But once again, not a guarantee that you're going to make money. Market conditions are market conditions, unpredictable as always. So there's no. It's not like you're selling people on something. It's just look, it's the same as like if you wanted to to learn how to like make clothing or like shoes or whatever. It's like, yeah, you can go and learn. Doesn't mean like you're going to be good at it.
Yeah.
Doesn't mean that the market is going to find a need for what you're producing.
Yep.
It just means that if you want to learn this skill, here is one of the places where you can do it.
Exactly, yeah. And like it'll just take you away like how to identify different scams. When I actually launched my token, I remember getting scammed out of $5,000 actually because
of snipers, or
it wasn't actually out of snipers. So this was also a mistake on my end, but see, this is why you need to listen to those experiences, right? I remember I wanted to get my coin listed. So there are two big listing websites. There's one called CoinMarketCap and CoinGecko. That's where people go to like view different coins and like the Bitcoin, Ethereum prices and like random coins, right? So I wanted to get listed on them. I found this guy, he was saying that, and it looked like he had like a legit Twitter, a legit this, legit that, and then he was charging a certain amount to get listed on those websites. Now those websites, when you go onto them, in the fine print, like they'll tell you, oh, like if anyone claims that they can get you listed on our site, forget about it. Like you need to go through a certain process with us in order to get listed.
Right.
I think on CoinGecko it's free. CoinMarketCap you actually do need to pay the $5,000. But like I remember going and seeing this guy and like everything looked sort of legit, and like I worked with him, gave him all the information, and then obviously I sent him the money. Nothing happened. Got scammed out of that, right? But like just providing that simple bit of information. Say if there are like 100 people in the community, if they listen to that, now they know for a fact, like I went through that experience because no one told me, right? And obviously hindsight is 2020. You look back at that was stupid. Why the fuck did I do that, right? But I didn't have anyone to tell me. I was still learning my way. I really wanted to get my coin listed. I was really eager. I was going through certain emotions and stuff, right? So it's important to like listen to these things because it's not only, okay, well, how do I make? But also, okay, well, how do I not lose? I obviously gave that marketing example, this coin listing example that I just gave you. So like, that's sort of like the information that you get. It's how do I make, but also like, how do I protect my money too? And like, how do I spend it on the right places? Because like a lot of people will think, there are people out there who have the funds, like fund stuff. They may have 5K, 10K lying around, which is good to get you, started. But they may just automatically think, okay, like if I spend this here, spend here, spend here, spend here, I'm going to start making money. It's like, no, you have to be very careful and pick and choose where you're spending that in order to get, your best ROI and not to get scammed, of course. So it's just stuff like that. And that's why it's really important to just have people who, you listen to, who've been through it and get that advice. Because most things on, let's say, YouTube, they're not going to get into those details. Like you'll go on YouTube and say, okay, how do I code on blockchain, or how do I launch my own coin? But like they won't get into like the actual like depths and weeds of it,
and there's no interaction. It's just like I'm watching the video and then I hope they read my comment, or I hope somebody responds to it, versus like a server or what have you.
A community, or you have like a community where like the information is present, plus you can speak with those people. So like you be, let's say I explained that story I just explained to you, you can then message and be like, okay, hey, can you give me more details about this, or more details about that? A good thing about it too is you can have people vet stuff as well. So let's say there's someone else who found another guy who looks legit, who does these listings. You can just message in the community and be like, hey guys, like this guy says he does these listings. What do you think? I could, let's say, step in, or another expert could join in, or another member of the community could go in and be like, whoa, dude, like stay away from that. These guys are 100% scams. Stay away from that, right? So that's sort of like the benefit of having other people too. Not only do you obviously get to bounce ideas around, but you can also get sort of like that vetting process by experts to sort of tell you, like if you're unsure about a stage in the process, you can get that like second opinion as well.
And then also there's an added layer of trust there. Well, rather, it will be zero trust, because the thing is, like, your community is only as good as its reputation.
Exactly.
If you have enough negative incidents where it's either individuals or as a group or the exec team or what have you is behaving uncharitably towards people, well, people are like, word is going to spread, and they're going to be like, well, don't use this community because it's a scam, or don't do that, like, don't buy into them, don't, whatever. So there's a direct incentive for you guys to not fuck it up and to make sure that it's growing. Because then, like, the moment that there's even like a whiff of like impropriety or anything like that, people are going to be like, oh, well, I'm pulling my subscription, I'm blacklisting all these people, I'm not dealing with any of them whatsoever, and then I'm going on TwitLonger and writing a book on like why you should avoid all these people.
Exactly, and I mean, it's not only that too. A good thing about the month to month as well is to hold like myself or like the experts accountable in sense of keeping the information up to date. Because like I said, like I could explain something today, it's relevant. 6 months from now, maybe a completely different scene, right? So like that month to month too is also to make sure that the information is always up to date. So if things just stay outdated or stale or not kept up to date, then it loses value, right? And like people will just pick up on that. Like it doesn't necessarily even need to go to the extreme of obviously like scams or stuff like that. Even if it's just a matter of, oh, I joined your community, but the information is outdated. Like you're stuck in, I don't know, 2021 with your information, right? Then it's like, what's the point? I'm gonna pull my subscription, look for that information elsewhere.
Yeah.
So the month to month is always to also to make sure that, okay, no, like you're always getting the most up-to-date thing. This is a very fast-moving space. Here's like the experts' continuous updates on what's going on and how to make money, etc.
Right on. No, that's awesome, man. That all sounds positive because yeah, like we started earlier, I have had an aversion to crypto for the longest time, and like the more that I interact with people like yourself and otherwise, it reassures me that like, okay, yes, there's that part of it, but it doesn't have to be like that.
No.
There's actually people working to mitigate that, and whatever your morality against like making money or doing it for philosophical reasons or what have you, the space is open to kind of everyone in that on that spectrum. Like if you want to go to pump.fun and make your millions or your thousands or however much money they're making, like by all means it's there.
Or lose it.
Yeah, or lose it. Yeah, about that 90% of the time. Yeah, or lose it.
Yeah.
Yeah. Right on. So in terms of your socials, people can just find you at Joeknowscode.
Yes, yeah, that's the best one on Twitter. Best
Beautiful.
place to find me. And yeah.
And the website is blockops.com, blockops.com.
Yes.
Perfect. Well, thank you for taking the time to join me today. When you launch, what's the timeline looking like you said?
Yeah, so a week. Yeah.
In a week?
In a week, yeah.
Beautiful.
For that token launching website, yeah.
Okay, beautiful. Hit me up because I would love to check it out.
Sure.
And yeah, would certainly love to have you back on in like, I don't know, weeks or months ahead of time just to see like where you're at with the project and the community and whatnot.
Yeah, no, I had a great time, so thanks for having me on.
Yeah, my pleasure.